Let's get going. Let's stop recording. Let's get this out of here. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. You guys have a great... Oh, look at this. Robert's here. Okay. Hey, Brandon's here. All right, Brandon. Intakes. IT takes. Harold. All right, Mystic. Major. Okay, Theron. Edix. Leonard. Edox. Okay, so my name's James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow using nothing but pre-qualified dividend stocks, and those are companies that have consistently increased their dividends to their shareholders for a minimum of 20 consecutive years. What does that mean? Year after year after year, higher and higher dividends are paid out to the investors. That's you and me. Once we start buying and selling stocks, we become the investors. We become the shareholders. Okay, so if we're the shareholders, we get a portion of the profits. The only companies I like to look at are those companies that have increased their dividends for 20 consecutive years. Meaning, Alex, how's it going? Meaning, if they are consistently profitable, hypothetically speaking, my share of the profits should increase every single year. So every single year, as long as the dividends keep increasing, the company's continuously profitable, those are the companies I want to look at. Those are the companies where I want to invest my own personal money. You guys can invest your money wherever you so see fit. Look at futures. I don't do futures, sorry. I don't do them anymore. I used to years ago. Okay, but yeah, you get to a certain point in life where you just want things simple and easy. Arrow. I got one share of Macy's. I know you said buy low, sell high. Can we take a look at it? When to sell? Well, Arrow, alrighty, let's take a look at Macy's. Now, a year ago, Macy's was at 16. Then she dropped at the bottom of the year at 1061. The top was at 2015, and that was in March. So since March, she basically went sideways. Oh, I gotta change the screen so you guys can see it better. Come on, there we go. Alright, so since March, she's been going basically sideways, staying within a channel between 18 and 20, just going sideways. But recently, she just dropped. So now she's at 1593. So you gotta ask yourself a couple of questions. One, hey, Doc's here. Why you being so aggressive though? Why am I'm not that aggressive. Okay, I buy dividend stocks when they hit a bottom and they turn around and go to the upside. I'm not quite sure what you mean by being aggressive. Okay, Rob. Doc's just checking in. Hey, Doc. So that being said, I like Macy's. Macy's has given me a lot of money this year, so I get no problem whatsoever owning it. Now, it is only about 9 o'clock. It is a Sunday night. The market opens tomorrow. If you guys aren't aware, AIM for high, 185. How are you doing? So, you guys may not be aware of this. I'm in St. Petersburg, smack dab middle with a, what do they call it, hurricane, tornado, or tropical storm. Smack dab in the middle of it. So if the electricity goes out and we have to cut short, it is what it is. Have you had your fill of rain yet? You know what? I'm inside. It rains. You know what? I remember back in 87. I think it was 87. 88. 87, 88, or 89. We had so much rain. It was just unbelievable. This is nothing compared to what we had before. Debbie is coming. Yep. Should we buy the deep? I have no idea what that means. Buy the deep. I'm sure you're saying buy the dip. You're not getting much, though. You're not getting much, though, is St. Pete. Well, it's not that bad. You know, just a little bit of blustery. It's a blustery day, as the great, what's the name? Winnie the Pooh would say. It's quite a bit blustery. Alright, so you're having an issue with Macy's. Alright, Macy's has a new bottom right here, 1593. I have no idea where you jumped into it. Now Macy's, where did I jump into Macy's? I know Macy's here. No Macy's there. There you go, Macy's right here, 1780. All right, so I'm into Macy's at 1780. All right, just below the 18, just before she dropped. Check it out. This is where I'm at. So I think tomorrow morning, dollar cost average down on some of those bad boys. Sorry, yeah, meant dip. AMZ, Google, Spider. Yeah, I don't do Amazon, I don't do Google, and I don't do Spider. But I like dips on dividend stocks. Now, when I say a dividend stock, I mean a stock that has increased its dividends to its shareholders for 20 years or more. Jumped into this past Thursday, 1607. Well, we'll see what happens on Monday. That's about all you can do. Okay, you got to remember that. Monday starts a whole new week. She goes up, she goes down. She goes up, she goes down. Right at this moment in time, let's zoom into that a little bit. Right there. Alrighty. As of tomorrow. Yo, I'm just getting into stocks. What some good cheap stocks you think I should buy? Drew, I don't know anything about you. I can't really give you any suggestions, but if you want to call, you want me to call you, we can chat. DM me your phone number. We'll call, we'll chat and see what's up. All right, Mark wants to look at Walgreens, WBA. So let's write WBA down. We'll take a gander at it. WBA. But at this moment in time, we're looking at Macy's. We're going to see how far Macy's is going to go before she actually turns around. Now, if you know anything about stocks, you know this right here. Let's turn around and go this way. This right here, this gap down from 1950 down to 1650, that $3 drop that we saw 2 weeks ago. Wait a minute, that was 3 weeks ago. See it right there? On the 15th, she drops from 19 and drops all the way down to 1608. That's a $3 drop. Savannah, dividend stocks versus bond, which is better? Well, I haven't met a single bond that paid over 20%. Now, if you're actively investing, you can get a safe, predictable 1% per week, which comes to over 50% per year. But if you're a bond person, okay, you just throw the money in there, you get what, 5, maybe 8% for a bond? D, I'm interested in learning. Well, welcome, Miss D, or Mr. D, I have no idea, I can't tell by that picture. Alex wants to take a look at Wally World. WMT. All right, it's on the list. We'll take a gander at it. So here's the scenario. Untold Stories. How are you doing? UEC. Never heard of it. UEC. Okay, UEC. Huh. All right, inspire me more. What do you think of doing covered calls on Spider besides it being expensive? 1.5 right now for August 9. Inspire me more. If you like the Spider, say more power to you. I don't do the Spiders because, well, they're a little overpriced for me, and the consistency on dividends. Simone, how are you? The consistency on the dividend increases that comes with the Spiders just ain't there. I mean, let's take a quick look over at Yahoo Finance. SPY. There's a few things I don't like about the Spiders. Okay, inspire me. Historical data. Take a look at the dividends. Well, we'll just go back about 10 years. 69, 78, 102, 69, 84, 98, 83, 94, 114, 93, 103, 221, 105, 108, 133, 103, 135, 110, 144, okay, 144, 158, 160, 170, 150. Yeah, it's just up and down all over the place. No consistency there whatsoever. So when I'm investing in a stock or when I'm looking at a stock, especially a dividend stock, that's not increasing at all. It's going up, it's going down, it's going up, it's going down, it's going up, it's going up, it's going up, it's going down, it's going up, it's going down, it's going up, it's going down. Where's the consistency in the profitability? There isn't any. Okay? Alex, just confused on Walmart since it had a massive drop today. Well, Alex, Walmart's on the list. We'll take a gander at it in a minute. But at this moment in time, I'm trying to explain to Inspire Me More why I don't like spiders. Okay, that's one thing. Not consistent with their dividend increases. Okay? Take a look at what the yield is. Okay, now, Inspire Me More. Are you watching this? Now, this is live on YouTube, so you can see the numbers a little bit better. Now, live on YouTube, you can see the numbers a little bit better. Look at this number right here, the yield. If I'm investing in this stock, spiders, what are they giving me for annual rate of return? 1.26. I get that kind of return from Macy's from 1 week. Everything has dropped today. Seems like, yeah, you're right. Okay, you're absolutely right. Everything dropped on Thursday and Friday. Who knows? Okay, that's why reason number one, never buy something you do not want to hold long term, because you just might have to. Laurie, when starting your technique, what are the odds of someone wanting to buy your 1 or 2 options? Well, Laurie, let me go back here for a second. Okay, hold on 1 second. This is for Laurie specifically. Alright, Laurie. What do you see the options right here? This is the option chain. This is the option chain for this coming week, 9 August 24. Every single option you see on here, 13, 13.50, 14, 14.50, 16, 16.50, so on and so forth. If it is listed here, okay, and if you buy it or sell it at the market, then the market maker is required to buy it. So it's not an if somebody wants to buy it. If it's listed here, okay, the market maker is required to buy it. That's part of his job. He creates the market. Now, if you go into the corner store, the guy who owns the store is the market maker for the corner store. He will buy a gallon of milk for $3 and he'll sell it to you for $3.50 or $4, whatever the going rate is at the moment. There is no, well, if I buy these, who's going to buy these? No, it doesn't work that way. You know, so if you buy the stock and the option is listed here, well, the market maker is required to fill it. Okay, hopefully that answers that question. It takes 12, no, 1. That's interesting. If you're investing in dividend stocks and then selling the call, what does the dividend matter? Ooh, no, that's a valid question. Okay, so it takes 12, no, 1. Let's take a look at something really quick just to give you a brief outline what's going on. Good evening, Lucky Larry. So, here behind me is a calendar. We can all see that. August 24, which is this month, correct? We are currently, what the hell are we currently? Right here, August 4th. Okay? Tomorrow, Tuesday, Wednesday, Thursday, so on and so forth. Blah, blah, blah. Each one of these little green dots here represents a company. Okay? Walmart, Hershey, RTX, Starbucks, Visa, Siri, IBM, British Petroleum, Wells Fargo. You've heard of all those companies. How does this covered call strategy perform in a down market? Well, Lucky Larry, we're going to find that out, aren't we? Everything dropped. Well, Larry, when you're investing in dividend stocks, you're investing for the increased dividends or the consistent increased dividends. That means if I buy a stock every year, I'm getting higher and higher and higher dividends. If the stock goes down, what matters? You're still going to get a higher and higher dividend. All right, so remember what the main objective is. The main objective is, say, pure, predictable 1% per week. Yeah, I get that. But if I'm only buying quality dividend stocks that continuously increase in value or continuously increase their dividend payments, does the price actually really matter? Or is it the safety, predictability, and knowing that the company is going to increase their dividends again next year and the year after and the year after? You have to decide, why are you investing in the first 10? first place. Okay, I'm investing for weekly cash flow. I've been doing this for a while. I've seen the stock market go up. I've seen it go down. I've seen it go up. I've seen it go down. That's all it does. Okay, even in a down market, what people call a down market, the money doesn't disappear. It goes from one person to another person. It goes from one industry to another industry. It goes from one set of investors to another set of investors. It doesn't just disappear. Okay, so what does the dividend matter? Each little dot, like I said, represents a company. Now, the company is going. The green dots represent the EX dividend date, which is the last date the stock trades before the dividend is paid out. There are 4 dates to remember when you're investing in dividend stocks. Here we go. Date number 1 is the announcement date. That's when the corporation says, hey, this is how much money we made. This is how much dividends we're paying out to the investors. Date number 1. Date number 2, the EX dividend date. The EX dividend date, represented by all these little green dots, is the last day the stock trades before the dividend is paid out. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4 is the payment date. That's when you actually get your money. All right. So why do the dividends matter? Because 2 weeks, usually 2 weeks before the dividend date, the stock has a tendency to go up in value. What do I mean? Well, let's take a look at a few. All right, C, right here. This is Citigroup. The dividend's 56 cents. See the 5th right there? What is 2 weeks before the 5th? Well, it's not the 29th. The 22nd of July. Okay, so let's look at C on the 22nd of July. Okay, so she opened up at 65.14. The dividend is 56 cents. So what we're going to do is we're going to take the opening price of the day way up here, okay, add it to the dividend, and that will be our exit price. Because if I'm going to do a dividend capture strategy and see if the stocks move up before the EX date, all right, I want to jump in at the opening of the day. And this one is 65.14. The dividend is 56 cents, so you add those two together. It's 65.70. That's my exit target, 65.70 when you add the two together. Okay, did it hit 65.70 the first day? Nope. Second day, nope. Third day, nope. Fourth day, there you go, right there. Nope. Fifth day, nope. Sixth day, nope. A week. It took a week. Okay, so it took a week to hit the target. Okay, but it went up. That's what they normally do. Let's take a look at Ford. Ford's dividend is 15 cents, and we will be looking at the 22nd, 23rd, 24th, the 24th. So on 24th, there we go. Oops, right there. Okay, on the 24th, we opened up at 13.73. So 13.73 and 15 cents makes it 13.88. Okay, this is going to be a tough one, only because if you take the opening of the day, 13.73, and you add the 15 cents to it, okay, you get 13.88. What was the high of the day? 13.88. Well, you made your target price. Okay? So stocks have a tendency to go up before the EX date. All right, let's get back to where we were. More questions. I'm new to investing and really don't know where to start. It's frustrating. Cowdog 128. How are you today? Now, Cowdog, I can't say that I can help you out any other than just keep on coming back and find out what kind of questions you need to know. I like to walk the equation backward. Okay, you want to jump in and start investing. Okay, it makes sense. But what do you plan on doing? How much time do you plan on devoting to it? What are you looking for? Are you looking for cash flow? Are you looking for capital appreciation? Hello, good evening. Thanks, Coach. You got it. So it depends on what you're looking for. If you're looking for capital appreciation, you're looking to buy a stock and have it go up, yeah, you're in the wrong place. That's not what I'm focusing on here. What I'm focusing on here is safe, predictable, consistent 1% per week. I'm not looking for capital appreciation. I'm not looking to buy the stock and have the stock go up. That's not what I'm looking for. I'm looking for it to actually turn, because when it finds the bottom, okay, 30-day high is way over there at 2050. Now we're down here at 1593. So what's going to happen after a 30-day bottom? You can only have one 30-day bottom. You can only have one 30-day top. So after it's a 30-day top, it's going to drop. Well, here's the 30-day bottom. What's going to happen next? Usually, it's going to go up. Give me a second. Go in these videos. So usually it's going to go up, and what are we looking for? Well, this part of me, I'm only looking to capture a 1%. Well, how do I get that 1%? First of all, I got to look at where the stock is. Well, up over here, the numbers appear up here. The last traded price on Friday was $15.93. The bid, $15.87. The ask, $16.09. So come tomorrow morning, I can buy this thing at $16 and collect 31 cents. Well, I'm losing 9 cents right off the top, so I'm actually walking away with 22 cents. So 22 cents is over 1%. That's what I'm looking for. So if I buy Macy's, sell somebody the rights to buy it from me using what is called a covered call. So you buy a stock and you sell it to someone else using a call option. Specifically, a weekly call option. Now, interesting thing about weekly call options is they expire every Friday. Okay, all these options here, 9 August 2024. All these options here, 16 August 2024. So this is this coming Friday. This is next Friday. This is the Friday after, the Friday after, the Friday after. So I can do this trade every single Monday, because Monday starts a whole new week, and tomorrow starts week number 32 for the year. Now there's only 52 weeks in a year, right? So tomorrow starts week number 32. So if I'm looking to capture 1% on a weekly basis, my account's already up over 50%, which means I'm making more than 1%. And in case you're wondering, for those of you that are new here, yep, all my trades are logged online. Okay, it says right here, current trades for 2024. Wait a second, let me back up for a second. My website, up here, up in my bio, wherever you find out where my information about the author or whatever. Okay, up there you will find my website, The 10-Minute Trader. You can do a little bit of research on Google. You'll see that I've owned this website for over 20 years. That 10-Minute Trader. Slide down. Current trades for the year. Okay, let's view them all. The very bottom, you're going to find week number 1 for the year. Right here we go. Week number 1. Here are all the trades I made in account number 1 on week number 1. Okay, account number 2. All the trades I made week number 1 for account number 2. Now I share 2 accounts with you guys, specifically for a reason. Reason is account number 1 is an all cash account. All right, it's an all cash account with $142,000 in it, and it averages over 1% a week. Now, at this moment in time, I'm up 46.1% since the beginning of the year. I've already withdrawn over $28,000, which we live on, and I don't even know what the current balance is. But anyway, account number 2. Okay, this is a margin account. Okay, $100,000 cash, $100,000 margin, which is borrowed money. I do suggest you do not do margin account until you understand what it is and what the risks are. Yeah, risks are. Okay, but this account here is up almost or over 70% so far for the year. 70% so far for the year, just doing dividend investing. Okay, so let's go back to the chart. Here we go. So let's do some more of these questions. So cow dog, to answer your question, you got to know what it is you want, how much time you're willing to put forth toward it. Okay, so this here is very slow, it's very boring, it's monotonous, it's repetitive, it's the exact same thing over and over and over again. Macy's, we're in week number 31. We just finished week 31. Tomorrow starts week 32. I have bought Macy's and traded Macy's every single week for at least 25 weeks this year. Every week I buy Macy's because the premiums that it's giving me, the rate of return that I'm getting on a weekly basis with Macy's is just off the chart. So I just keep on buying it. Okay, 28 more questions. Alex, what's some high dividend stocks you recommend for passive income? First of all, Alex, I don't categorize my stocks by their yield. And I know that might be strange because I'm sure you're used to hearing certain terminology consistently. Well, what's the annual yield? Really don't care. And I don't know how to explain it to you any simpler than I don't care about the yield. What I do care about is the consistency of dividend increases to their shareholders. Okay, if I'm a shareholder, I want to know where I'm putting my money. They are consistently profitable. Well, how do you figure that out? Well, it's really not that difficult. I could go and take a look at the, the annual reports, the quarterly reports, all the news, all that kind of nice, neat, fun stuff. Or I can skip all that crap and go right to the dividends. Now, the dividends are the share of the profits that goes to the investors. So if the company is consistently profitable year after year after year, well, logic tells me that hypothetically they should increase their dividends every single year. And if they increase their dividends every single year, to me that means they're profitable. I don't need to read all that annual report. I don't. Once they start cutting the dividends, that makes me question, wait a minute, last year we were doing this, this year you're taking some of the profits away, well that means you're not as profitable. Okay, if you're consistently profitable, well, you're consistently making money. That's where I want to put my money. Okay, so Alex, as I was saying, I don't categorize my stocks that way. I categorize them by how often do they increase their dividends. Now, the only ones you'll see on my list, the little green dots, that's one of my lists. Okay, all these companies have consistently increased their dividend. Those are the only ones I want to look at. So, if this company here has a 5% yield, and this one has a 2% yield, and this one has a 1% yield, you want to know what? I really don't care. I don't. And the reason why is because 2 weeks before the dividend, the stock has a tendency to go up. Great. Well, if I'm buying it at a price and I'm selling it at the exact same price and I'm collecting the premium, that premium is more than 1%. Well, there's my 1%. Do I care if the stock goes up? No. Do I care what the yield is? No. Do I care about the dividend? No. All these things just bring me to a point where saying, wait a second. Clorox is paying a dividend on the 14th. 2 weeks prior to the EX date would be the 29th. Great, so I'll buy it on the 29th at the market open on a Monday morning. I will sell somebody the rights through what is called a covered call to buy it from me for the exact same price I just paid for it. So I'm not making any money off of the stock price going up. I'm making my money off of the premium. Now, if you consistently look at the premiums, look at the Macy's at 16 bucks. It's going for 31 cents. Well, that's more than 1%. That works for me. The question comes in is, do I like Macy's at $16.09? Well, my answer would be yes. But I already own Macy's, so it's interesting. Spoiler for you. Rule of 72. Your investment should double every 7 years with an average return of 10%. Worked for me. Well, spoiler, good for you. I make over 40% per year. Well, this year, well over 40%. I made over 40% last year. This year, that's like 40% in one account, just barely halfway through the year. The other account's already up to 70% so far. So on average, I do well over 40% per year. AM, what do you think about NAS? Well, to be totally honest with you, I never heard of NAS. And usually, when I say I never heard of anything, it has no option. So NAS is going to be no. Sorry, no. All right. Arrow. And I also bought 1 share of Target. Ooh, Target's a tough one. Target, dividend king, means they've been in business for over 100 years. They've increased their dividends to their shareholders for more than 5 continuous decades. Right at this moment in time, 139. The 139 is going for 276. You see that right there? If I'm buying it at this price here, the ask, and I'm selling it at the exact same price I'm paying for it, this is what I'm collecting, that's almost 2% of the purchase price. That's how you figure out what your rate of return is going to be. Remember when I said safe, predictable, and consistent? Well, this tells me what my rate of return is going to be for the week. Right? Come on, here we go. Alright, one more. And here we go. So once I figure out what my purchase price is, then you get the bid and you have the ask. Okay, the bid is what I can sell it for. The ask is what I can buy it for. So if I'm buying it $139.15, I'm selling it for $139, I'm collecting this right there, that's over 1%. What am I missing? Well, I'm missing what is the chart telling me. The high, the low, where was it, where is it, what direction is it going? That's what I want to see. Hold on a second. A year ago, we're at 134. Bottomed out at 102. That was back in October. Topped out at 181.52. Wow, and that was beginning of April. So from the beginning of April, she drops down to the new bottom, which was Friday. Ooh, that's going to be a tough one. Friday's the bottom. Okay, so here's the last 30 days for Target. 30 days ago, we're at 145, shoots on up to 157, drops all the way down to 139. Well, that's where we are. What does it look to you? Well, to me, it looks like she ran up, she came down, a little retrace, and then she dropped. A little bit of a gap here. We all know gaps have a tendency to fill, so on the way back up, that gap will fill right there. All right. That being said, I like 2 days to the upside. So I'm going to keep my eye on Target because this right here could be the 30-day bottom, or tomorrow might be a 30-day bottom. I don't know yet. Okay, we will find out tomorrow once this thing opens up, and then tomorrow night we'll say, hey, Target either hit the 30-day bottom or we have a new 30-day bottom. One or the other. All right, let's roll. How does sell option work? Oh, Mark, simple. You ready? In a covered call, there's a lot of videos on YouTube or online that will tell you how to do a covered call and the safety factor of a covered call. Because when you buy a stock, you own a portion of the company. Great. Well, it is yours until you decide to sell it. At this moment in time, Target is going for 139. It's going for 139. You have to decide whether or not you like Target at 139. So if you do, hypothetically, you now own a portion of that company. So you are entitled to certain benefits. One of those benefits is you can collect a dividend every 90 days. Target pays every 90 days. Now, they've been increasing their dividends every single year for over 5 decades. They are what's called a dividend king. All right, that being said, if I buy it first thing tomorrow morning at 139.15, now I own it. I can do whatever I want. In option, you have call options and you have put options. I'm not going to get into put options at all because this trading strategy was created for a 9-year-old. It needed to be simple, safe, predictable, consistent, and no way to lose. My daughter was 9 years old when I created this trading strategy specifically for her. Okay? Now, if I buy it and I sell it for someone for the exact same price, I collect what is called a premium. Now, your best bet, if you're really new at it, is get somebody on the phone with you or through a live Zoom call and have them walk you through it. Okay, that's one of the things I offer in the live training group in the mornings, Monday, Tuesday, Wednesday, Thursday mornings before the market opens, and then Friday afternoon before the market closes, because we want to make sure all our positions are going to be as profitable as we would like them to be. Okay, we usually figure that out on Monday. So if I'm buying target 139, selling my rights at 139 to someone else for a covered call, collecting my premium, that premium's over 1%, what do we wait for? Well, we wait for Friday afternoon. It's either going to be over 139 or it's going to be under 139. And that we will figure out on Friday. Okay, now we have an idea of where she's going to go based on the buying and selling patterns of you and me. We are the buyers, we are the sellers. We are the ones that create this mess. Okay, the market maker, all he does is he opens up the door and say, hey, I'm open for business. What do you want? What do you want to buy? What do you want to sell? It's us that keep buying. We get to a certain point and say, wait a second, this thing ain't worth 157. So it stops at 156 and a half. What happens then? You know what? I'm at 156 and a half. Let me take my profits. And then you get a bunch of people start taking profits, and then the stock drops. And then we're down here at 138, and you got guys like me saying, wait a second, target at 138? Well, I like it at 138. So it's all a big game. You got to know where to jump in, where to jump off. Don't get too attached to a stock. This is not matrimony, okay? I'm not asking you to live with the stock for the rest of your life. Buy it if it's a good deal, if it makes sense. Get your profits, get the hell out, move on to the next one. I like Target. I look at Target 4 times a year, just before they pay their dividend. Let's take a look at some more questions. I got 72 questions. Wow. Yo! Andre, I'm finding success swing trading put options. Well, Andre, good for you. Share Rome, yes. Any more questions? Uh-oh. Alright. Hey, Austin's here. How's it going, Austin? Mark. Okay. Just started this investing. Starting off with trade options on Robinhood. Alright, Mark, I do trade options on Robinhood. Alright. Most people lose their buying options. You know what? I'm going to agree with Mark, or CP. Okay, a lot of people lose money buying options. There's a huge difference between the buying an option and selling an option. I personally am an option seller. Okay, I'm looking for safety. I'm looking for predictability. I'm looking for consistency. And I'm going to say it again. I'm looking for safety. Okay, I'm 60 years old. I do not want to have to go back to work. Okay, if I'm buying something, I want to make a profit of it, and I want to know what that's going to be before I even do it. Covered calls are one of the safest trading strategies there are. Now, I don't buy options, I sell options. I buy a stock, I sell someone an option to buy it from me for the same price I paid for it. For that privilege, they give me what is called a premium. Premium, and that goes directly to me at the exact same moment. So, let me go back to show you a couple of the trades that I made. Okay. Right, hey, we'll look at this one right here. LUV, which is Southwest Airlines. Okay, so I bought 1,000 shares. Here's the date right here, the timestamp, 9:35. All right, at 9:35 a.m. on the 15th, I bought 1,000 shares of LUV at 27.46. Okay, everything's right there. Okay, and look at this. I've also, the exact same time, I sold the 27.50 call strike for 45 cents. Okay, I bought it for 27.46 and I sold the 27.50s for 45. That's almost 2% on that one trade. Okay, that's all I care about. Is it going to hit it by that day? So yeah, the timestamp is right over here. What kind of a trade it was, what the trade was, sell options, buy stock, 10 contracts, 1,000 shares. LUV was the stock, which is Southwest Airlines. The expiration date for the option, okay? The option strike price, $27.50. And what did I buy the stock at? Right there, $27.46. What did I sell the option at? 45 cents a share. That's 2% of my trade. That was a 2% trade, that one right there. Now I do this every single Monday, and I've been doing this every single Monday for the last 15 years. Alright, so that being said, that's where we are at the moment. So let's go for some more questions. Yeah, Mark, okay, this is what I need. Alright, so Mark, you can DM me, I'll give you a buzz. CP, Mara, oh, Mara, I like Mara. M-A-R-A. Now, Marathon, again, is one of those companies we've been following for quite a while. It actually dipped. A year ago, 1650, bottomed out at 7, topped out at 34. That's a big step. I mean, that's a big difference between the bottom at 7 and the top at 34. Okay, last couple of weeks, we want to look at the 5th, right here. So, 30 days ago, we opened up at 1965. Come on. Uh-oh, I hit the wrong button. I think I hit the wrong button. Damn it. That happens. Alright, well that's messed up now. No more videos. I hit the wrong button. Well, anyway, so Marathon. 30 days ago, we opened up at 1965. See that way over here? 1965. Look at our 30-day top. 27.30. From 27.30, she drops down $10. That is a 30% drop. A 30% drop in 30 days. So what do you think is going to happen with a stock that drops 30% in 30 days? Well, more than likely, there is going to be some people jumping in on that. Marathon Digital at 17.30 may be a great deal. Alright, let's take a look at some more questions. Oh, wait a second, we didn't even look. How much are we getting for that? The 17s are going for $1.02. Wow, is that right? Hold on a second. I need to check this out. So you get $1 divided by 17. Gives me a grand total of 5.8%. I'm going to write this one down. I'm going to do this one tomorrow. Marathon. That one deserves a double. Well, I was going to say, it deserves a double circle. Okay? All right, I'm looking at it. It deserves a double circle. And it's on my list already with a double circle. All right. Anyway, that's Marathon. So yeah, I'm going to probably jump into some of that tomorrow. Now, let's keep going for some more questions. Mark, CP, makes sense. I just have Starbucks right now and did sell a call option to test it out. Alright, Mark, way to go. Uh-oh. Jay Lipman wants to look at the big floating turd QYLD. Alright, Jason, considering you're new here, Jay. Jay Lipman, QYLD. Well, here we go. QYLD is a no. It's a monthly optional stock, which means I can only write a covered call. Whoops. I can hit play. Alright, so we're looking at QYLD. Let me tell you why I don't like QYLD. Number one, it's a monthly optionable stock, which means I can only do a covered call once a month. Once a month means I'm only getting 12 option contracts or 12 checks on a yearly basis. Now, what about a company that does weekly options? Well, weekly options is 52 times a year. So 52 checks per year is better than 12. Am I right? All right, well, let's see exactly what kind of a premium they're paying. $16.93 is the purchase price. So the 17 is going for 25 cents. All right, well, that's over 1%, but here's the thing. 25 cents, the purchase price is $16.93, and that comes to a grand total of 1.47%. Okay, 1.5%. Cool. So we got 1.5%, but that's for 2 weeks, right? So 2 weeks at 1.5%. Well, we're only getting 0.75% per week, which is still not bad if you think about it, because you multiply that by 52, because it's 52 weeks in a year. Well, I'm getting about a 38% rate of return doing monthlies on QYLD. If you like QYLD, which I don't, 38%, well, that's really not that bad if you think about it. 38% is a nice return. But ask yourself a question. Would I prefer 38 or would I prefer 50? I'd definitely go for the 50. I just don't, and here's another thing I don't like about monthlies. Okay, at this current moment in time, take a look at this 90-day chart. Okay? Up, pull back, up, pull back, up, pull back, up, pull back. Okay, so hypothetically speaking, she should go up now, right? Well, where's she going to be? So this option here, 16 August, expires in 2 weeks, right? 2 weeks. So I got to figure out, where is this thing going to be in 2 weeks? Well, I can't really tell now because I don't know where the bottom is. But if I'm wrong here, well, I got to carry it for another 4 weeks because the options are only every month. And if I'm wrong, I got to carry it longer. What does September's look like? September 17 is going for 20 cents. See it right here? This month 17 is going for 25. Next month 17 is going for 20, which is less than this month. Like, what's the point? Anyway, what I'm trying to get at is monthlies usually don't work. Okay, I've never seen a monthly that's actually paid over 50% per year. But it gets worse than that, Jay. Hold your horses. And if you order now, we can double down your trading. Okay, what are we looking at? QYLD? QYLD. Now, putting QYLD into Yahoo Finance, because that's where I like to get my financial information from. You can get yours from anywhere you like. All right, so here's the thing. If I get into QYLD, what are they paying me? They are paying me 11.6% for the year. So you have a choice. There's always choices in life. Every choice has its perks, has its pros, and has its cons. All right. So if you're a lazy trader, you say, you know what? Here, just take my money, invest it for me. Give me the 11.6%. I'm okay with that. There's absolutely nothing wrong with that. Absolutely nothing wrong with that. There are money managers out there. Okay, there are financial advisors out there that need you to pay them to do your trading, because apparently, if you're buying QYLD and you're okay with 11.6%, great. Me, I like the 1% per week, which is over 50% per year. Wildcat Sam, happy Sunday to you too. What about NSC? Culinary Nomads. Oh, wait a second. We didn't even do the dividends on QYLD. All right, so here's the dividends for QYLD. They've actually been paying dividends. I did not say increasing dividends. Okay? They've been paying dividends since 2014. So listen to some of the numbers. Okay? We always go backwards from 2014. 26, 19, that's going backwards. 19, 26, 25, 21, going backwards again. 22, 20, 24, 14, 23, 16, 15, 17, 15, 20, 22, 16, 17, 20, 14, 13, 19, 15, 16, 15, 13, 10, 12, 15. Yeah, how do you know if this company is profitable? Well, if they're sharing their profits, they're not getting any more money to their investors. So in my eyes, that means they're not as profitable this year as they were last year. So if in 2016, they're paying 15 cents per share, and all of a sudden we're to 2017, they're paying 17 cents a share. Well, from 16 to 10, that's what the fuck is that? Well, that's over 50% drop, 60% drop in a couple of months. So if your profits are decreasing that much, I'll just stick with simple words. If your profits are decreasing that much, then why would I put my money into it? So the question for you is, why would you put your money into something that's not profitable? Number one, and the yield that they're giving you is only 11%. Okay. And the options are only monthly, which means you can only do it once a month. You know, if it works for you, fine. More power to you. This just ain't the right place for you. Do I trade tragedies? Okay, no. NSC. Now, usually, when somebody asks me to take a look at something, and I say I've never heard of them, usually that means it's going to be a no, because they either don't have dividends, they don't have weekly options, or the price is just outrageous. Okay, so this one has weekly options. Great. NSC. NSC. And see how often they've increased their dividends. Wow, check a look at that. Well, they've only been paying dividends for 10 years. That's probably why it's not on my list. Okay, went from 50, this is where it should stop. 54, 57, 59, 61, 72, 80, 86, 94, 99, 109, 124, 135. That's the way it's supposed to sound. Consistently going higher and higher and higher. So, NSC, okay, although it's not on my list, it only has 10 years of increased dividends. If you like it, more power to you. Let's take a look at the numbers. 251, holy cow, 226, 251. You can't really go 243 to 2, yeah. Look at the size of the premiums. Now, you do have to realize, and I do have to point this out, so this way people don't get confused or anything like that, okay? When you're looking at these numbers, they are going to change when the market is open. So, first thing tomorrow morning, all these numbers you're seeing here are going to be different, but the math is going to be the exact same. What am I buying it for? The ask price. The ask price, you get the closest strike price, because that's what you want to sell it. That's what I want to sell it for. And then I see, what can I sell that for? And is that the premium, what I'm collecting, what I'm walking away with, what they're going to pay me? Is that 1% of the strike price? The the purchase price. The purchase price being $2.51, I want to at least get $2.50. Well, right at the moment, the 227s are going for 15. The 230s are going for 13. The 232s are going for 11. The 235s are going for almost $10. Well, that's well over 1%. But here's the thing. They only have 10 years of increased dividends. And that might be good for some of you. Okay, me personally, I like 20 years of increased dividends. Okay, that longevity. All right. All right, so that's NSC. Next, let's keep going. Yeah, I bought 100 shares and did the contract sell. Okay, cool. Thoughts on NSC Culinary? We just took a look at that one. Real Estate Maverick. I like ORC, pays good dividends. All right, Maverick. Let's take a look at ORC and see what ORC has to offer for us. Orchard Islands. I'm going to say no to that. And the only reason I'm saying no to that, well, it's a monthly, okay? And she's way down, and $8. How do I know how often they've increased their dividends? And do they? What website or how do I buy? Pablo J. I said before many times, the website is The 10-Minute Trader, okay? Okay, the10minutetrader.com. Now, I've had the 10minutetrader.com for over 20 years. All right, let's keep on moving. If you're interested, who was that, Pablo? Right there, you click on the live button, and that brings you Dividend Stock Talk, which is the Patreon, where the links are to the live trading. All right, back here. Here we go. So ORC is going to be a no. Sorry about that, real estate dude. Mark. Okay. Pablo J. Thinkorswim. So the premium is for yourself to keep. Exactly. Okay, so if I buy the stock here, they ask price, the premium here, whatever the premium may be, 55 cents for the 750. It's a monthly. I don't do monthlies. They just don't seem to work out that well. Okay. And I have enough dividend stocks to have weeklies that I don't need to bring in any more. 63 more questions. Holy cow. You guys have lots of questions. Which site am I using? This is Thinkorswim. Okay. This behind me is Thinkorswim that is owned by Charles Schwab. You can go to thinkorswim.com, download it onto your computer, just sign up with Charles Schwab. They will allow you to do some paper trading for a couple of months before they would like you to join them. But it is what it is. Okay, Mark. Yes, the money is yours regardless of what happens to the stock. Yep, he's right about that. Okay, Mark. CP. You could buy too close early if you want to give back some of the premiums. Yes, that's true. But here's the thing. At some point in your life, you're going to decide what your time is worth, what value you're adding to your time. Are you thinking or swimming? That's funny. At some point in time, money loses its luster, and you prefer, or I should say, I'm at that point in my life where I would prefer to hang out with my kids, mow the lawn, trim the trees, wash dishes, anything other than working for money. I'll get that distaste for money at this point in my life, where I just assume I'd rather just lay around TV and watch videos all day. That's me. That's at the point in life I'm in. My money that I worked for all my life has to give me X amount on a weekly basis so that I can live comfortably. Alright, so CP, as long as the numbers work, I want to get my 1%. I want to do it on a Monday. And I don't have to worry about anything else until Friday comes. Alright, let's move on. Haven't tried that, only waited until Friday. Don't want to get rid of stuff I haven't learned yet. Makes sense. You need to learn when to do those other things correct. Sheila, good evening. Have we looked at MPC tonight? Marathon Pete Corporation. MPC. Well, alrighty then. Let's take a look at this. 167.55. The 167.50s are going for 360. Ooh, that's nice. Thanks for that. You check this out right here. Purchase price 167.55. The 167.50s right here going for 360. Okay, that's a little bit less than 2%. But you got to ask yourself the question, do I like Marathon at this price? Well, let's take a look at the chart and see what the chart is telling us. Because the chart does tell us certain things. Now, what we're looking at currently is the 1 year chart. First, I want to see 5 things. The high, the low, where was it? Where is it? In which direction is it going? Those are the 5 things I want to see. And it only takes 2 or 3 seconds. High, low, what is, and the direction. Okay, 2 or 3 seconds to figure that out. Once I see that, then I want to take a look at the last 90 days. That's the last 3 months. Well, this is what it's done for the last 3 months. Again, high, low, where was it, where is it, what direction is it going? All right, now, the next chart I want to look at is the 30-day chart. Because the 30-day chart tells me where is this thing going to go in the next 5 to 10 days, or the next week or two. Well, last 30 days ago, here we are, 172. Then we drop down to 161, shoot up, draw back, shoot up, draw back. We're right here. This baby's going to come down just a little bit more, find a new bottom down here before she turns around and goes back the other way. What I'm going to do with this one is I'm going to write down for next week. MPC. Nope. Alright, MPC. We're writing down for next week. Alright. So, I'm looking for a new bottom for MPC. Because look where we are. 3 days to the downside. Here's your 30-day high here. What usually happens after a 30-day high? Profit taking. Okay, she went from 162, now she's at 182. That's a $20 increase. Okay, $20 on a $162 stock. Well, that's over 2%, over 20%. A 20% increase in 30 days. Well, yeah, there's going to be profit taking. It ain't a profit until you take it, and nobody ever went broke taking profits. So she shoots up, you take your profits. After the profits are all done, she makes a new 30-day bottom. Once she makes a new 30-day bottom, she turns around and goes back up again. That's what I want to see. So we are going to be looking at MPC during the week to find out where she drops. All right, Sheila? All right, I think Mara is done dropping. CP, let's bring it. Didn't we already take a look at Mara a little while ago? I mean, literally. Okay, so here's Marathon right here. Now, we don't know exactly where the bottom is going to be. It just keeps dropping until it finds the bottom. Now, remember, Walgreens dropped for 7 years before it found its 7-year bottom. Once it found its 7-year bottom, well, then she turned around and went back up again. Well, at this moment in time, this is the 30-day bottom. Now, we're going to be looking at Mara during the week, so when she finds the bottom, we'll know whether or not it's a good opportunity to jump in and start taking to the rise. All right. Hope it is, Rogue. That's a $6,000 bag for the week. Well, all right, CP. John Doe. Anyone trading put options tomorrow? What tickers? All right, no puts here. Sorry, John. Mara, no dividends yet. Mikey G, we know that one, but we've been following Mara so close, and I forget what the reason why we let it slide. I think there was a reason. I don't quite recall that at this moment in time. Okay. All right. Question anytime. Mara is one of the exceptions. Yep, that's correct. Joy. Hey, James, how you doing? Miss Joy, I am doing absolutely lovely. Thank you. All right, keep going. Let's keep on rolling. Keep on rolling. Can I ask what platform do you use? Well, of course you can. This platform behind me is Think or Swim. All right? Charles Schwab, Think or Swim. Katana Blade, fairly new here. Do you ever sell stocks you do covered calls with, or do you hold them long term? Oh, Katana Blade, just quickly, okay, the longest I've ever held anything. Now, I've been investing for long weekend. I've been investing for over 20 years. The longest I've ever held anything is 9 months. That was Kimberly Clark last year. Okay, last year, I had three companies. Kimberly Clark I held for 9 months. Target I held for 6 months. And PPG I held for 6 months. I normally don't hold that long. This year, the longest I've ever held anything was 3M, and I held it for 11 weeks. 11 weeks was just a little bit less than the whole quarter, which is yeah, just 13 weeks and a quarter. What about Vale? Joy, you like Vale? V-A-L-E. V-A-L-E. Well, here's Vale right here. Now, I do have to admit I bought Vale many moons ago. Okay, what I want to do is I'm going to put Vale into Yahoo Finance to find out how often do they increase their dividends and what does it look like. Well, Vale has only been paying dividends since 2014, which is only 10 years. But look at the numbers. These things are horrible. 41, okay, 2014, 41, 14. That's a huge drop from 41 to 14. Okay, if I'm giving you money and you're giving me back 41 cents per share, and then all of a sudden, very next quarter, you give me 14 cents a share, okay, that's like a 60 to 70% reduction. That means you're not doing something right. All right, so 41 to 14 to 19 to 10 to 5. All right, you already lost me. Okay? Yeah, all over the place. 15, 40, 35, 46, 77, 44, 156, 69, 6? Real? No, sorry. Okay, now, I know you're new here, Joy. Okay? Now, I like companies that consistently increase their dividends. Now, you may think low of dividends. A lot of people do. They don't really understand them. The dividend is the portion of the profits that are paid out to the investors. So you and I, when we start buying and we start selling, we are the investors. Okay, Vale, you may like it great, fine and dandy, but they've only been paying dividends for 10 years. I like consistent increases for 20 years or more. There's over 300 companies that have 20 years or more increased dividends. Fine, those are the ones I want. Okay, this one, they're not consistently profitable, so that is a no for me. Sorry, Joy, it's a no. King D803. Where are you? I am to be your neighbor. Time to school me. Well, I'm in St. Petersburg at the moment. I don't know where you are, but it is what it is, King. Eves, August 153. So, by selling options of a company that pays dividends, your return will be better of... All right, Eves, I have no idea where you're going with that statement, but you're missing a few key factors. First, you got to buy the stock. You got to buy the company's shares first. Then, you can sell the options against it, but you can't do it beforehand. Okay? Any comments for IEP? IEP. I can't. Oh, really? You really want me to pick on this dude? Alright. So, I don't like ICANN. Okay? Not, I mean, it has, weekly options. Fine. Look what the pricing of the stock is. Okay, fine. Here's what I don't like. Let's go to Yahoo Finance. Okay? IEP. Alright? IEP. Let's take a look at the dividends. Okay, number one, I can't be right. It's got to be more than that. Yeah, I thought so. All right, so they get dividends all the way to 88, to 1988. They started out at 49 cents in 1988. It took them 3 years. They didn't increase at all in the first 3 years. Okay, in 1992, they went from 49 cents a share to 24 cents a share. So they cut it in half. Explain to me how that's a good thing. Okay, you have dividends of 49 cents for 4 years. And then in 1991 and 1992, you cut the dividends in half. And then to make matters worse, in 93, you cut the dividends in half again. And then you don't pay any dividends from 94 to 2005. Now you jump back in at 2005 at even less, at 10%, 10 cents a share. Okay, so you go 2.5 years at 10 cents. You go 15 cents for a couple of quarters. Then you're at 24 cents. You're 08, 09, 10, and then in 2011, then you increase it to 24 cents, from 24 cents to 49. All right, so you double it. Good, wonderful. But the very next quarter, you decrease it more than 75. Yeah, no, sorry. It's just making my stomach curl. Okay? Well, that's one. The dividends are absolutely horrible. Number two, why can't I see this? I can't see that number. Okay. Well, they got a decent premium. I mean, a decent yield. But the dividend, they're not consistently profitable. All right, so Joy, IEP, I don't like the dividends. Okay, they keep cutting the dividends. Yeah, that's a no for me. And then you also like CMBT. CMBT. Yeah, CMBT is going to be a no. Okay, because they have monthly options. Monthly options I can only do once a month. That's 12 times a year. Now, I don't know about you, but I would prefer 52 checks per year rather than 12. All right, so sorry about that. Hoffy. This is the Michael Berry at first. Okay, thank you. I guess. I'm not sure if that's a compliment or not. Spots gone, carpet clean. Dude, I tried calling you this morning. Good evening, James. Sorry I missed your call today. Was on the bike in Sturgis. Ooh, cool beans. I'm in here in the middle of a tropical storm, getting rained out. Got rid of my Harley years ago. I traded it for Goldwing. I know, Harley guys look down at me for that one. And you went from a Harley to a Honda? Yes, I did. I tell you why. Okay, Harleys don't have reverse. Harleys, I gotta yell talking to someone. Yeah. Am I buying and selling right now? No. Right now we are Sunday night getting ready to see what we're going to do tomorrow morning. As tomorrow morning the market opens and then we jump in and see what we're going to do. Futures looking rough. Okay. I can't even read that name, but thank you for that heart. That was nice of you. Wait, after many weeks of doing Macy's, my average price is $14.23. Okay, wait, I'm not quite sure what you mean by your average is $14.23 on Macy's. Because right now the stock's at $15.93. So it looks like you're making money. That's the other marathon. Oh, CP. Well, yeah, there are two marathons. There's Marathon Oil, gas company. Okay, that is MRO. And then there's Marathon Digital, which is MARA. Hey, Boleslaw. John, dude, I saw you here a couple of days ago. All right. C, you're better than Drunken Miller. Okay, I'm not quite sure if that's good or bad, but how do you make 1% per week? Simple. Just keep following me and just keep showing up every night. I'm here every night, 9 p.m. to 11:30. I do the same thing over and over and over again. We look at good dividend stocks. Now, what do I mean by good dividend stock? I mean any company that's consistently increased its dividends to its shareholders for more than 20 consecutive years. Now, you may think there's not that many of them. Well, you would be wrong. Last night we checked 9,600. Oh, what was the number? It was 9,600 and something different companies that we can choose from. Let's try do it again. Finviz, and there it is, Finviz. Okay, Finviz. The screener, here we go. There's the number right there. Wow, it changed again. Yesterday it was at 9,600. Now it's at 9,594. Okay, so that's like 9,600 stocks. 9,600 different companies you can choose from. $9,600 companies you can choose from. So I'm going to give you a list. So here's the list. 9,600 different companies. Dividend Kings. 54 companies that have increased their dividends to their shareholders for 5 decades. That's 50 years or more. Dividend Aristocrats. Dividend Champions. Both of those lists, over 150 companies, increased their dividends to the shareholders for 25 years or more. Okay? Dividend Contenders. 300 companies that have increased their dividends for 10 years to 24 years. Okay, just shy of going to upgrading to the next list. And then you always have Warren Buffett's list. You just buy a good quality stock, sell someone through a covered call, buy it, sell it, collect a premium. But you don't do that until the chart tells you it's the right time. Okay, I look for the high, the low, where was it, where is it, what direction is it going, and what is the odds and probabilities that I will be back into cash the following Monday. If I'm buying it for 16 bucks, is it going to be above 16 bucks come Friday, or is it going to be below 16 bucks come Friday? Well, what direction is it going? At this moment in time, it's going down. So I probably wouldn't do this until I find the bottom. And then it turns around and starts going back up. Then I would jump in. Oh, you look like Burry. Super cool. All right, thank you. Oils have been getting hammered the last few weeks. Maybe the geopolitical stuff pops this week. Cool beans. Alrighty, thank you for that. That was very nice. Now again, CP, I don't categorize my stocks by any other method other than when do they pop up on the calendar. That's it. When do they pop up on the calendar? So you got 9,600 different companies. What I like: Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there will give me 300 companies that have increased their dividends for more than 20 years. Okay? You take those lists and you throw them into a calendar by when they pay their dividend. You got 4 quarters. January, February, March is the first quarter. April, May, June is the second quarter. July, August, September, the third quarter. October, November, December, the fourth quarter. Just to let you know. This right here, week number 30, week number 31, week number 32, week number 33, week number 34, so on and so forth, all the way to week number 52 at the end of the year. That's the weeks by the year. We're currently coming into week number 31. Okay? Also, we're coming into week number 5 for the third quarter. There's 13 weeks in every quarter. Week number 1 of the first quarter looks the exact same as week number 1 of the second quarter, which looks the exact same as week number 1 of the third quarter, which looks the exact same as week number 1 for the fourth quarter. If you take a look, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, and Wells Fargo. What do those companies have in common? The only thing those companies have in common is they all have their dividend on week number 7 for the quarter, week 32 for the year, whatever. But they will always pop up next to each other every single quarter. Okay, more questions. Good. Hey James, hope all is well. Thank you. Thoughts on getting into Intel after its 20% red day Friday? Well, let's take a look at Intel. I like Intel. And as a matter of fact, I sold my Intel shares. Hold on a second. Nope, not there. Not there. Not there. Come on, I know I had Intel. Nope. Alright, I know I had Intel recently. Alright. Alright, let's take a look at Intel. INTC. Alright, Intel, tra-la-la. Yep, big drop. Now, we talked about this last week. Okay? We talked about this last week when a stock, especially a household name stock, drops hugely. A year ago, we're at 34.86, topped out at the end of December at 51.40, and we bottomed out this past Friday. All right, look at the last 90 days. That's the last 3 months. Basically, just channeled sideways. She popped up to 37. Now she's sitting at 21, 21.50. Okay, from 27 to 21. No, sorry, 37 to 21. That's a big drop. More than likely, this gap is going to fill eventually. When is it going to fill? Don't know. But I want to keep my eye on it. Tomorrow morning, we're going to be looking at this Intel to see how she opens up. Okay? I like 2 days to the upside. So if Monday's an up day and Tuesday's an up day, well, by Tuesday or Wednesday, I'll be jumping in, more than likely. Okay, but you got to ask yourself the question, do I like Intel at 21.59? Because that's the current price. And if you're buying at 21.59, what's your rate of return going to be? Well, the 21.59, the closest strike price is going to be the 22. And that's going for 59 cents. So you get your calculator out, and you go 59 cents, and you divide it by the purchase price, 21.59. That comes to a grand total of 2.7%. But wait, if you order now, you even get more. I'll tell you why. Check it out. At the 22, if the stock is above 22 by Friday, not only do you get the 2.7%, 2 3/4, but you also get the difference between the purchase price, 21.59, and the strike price, 22, which is another 41 cents. And another 41 cents is another 2%. So you're walking away with close to 4.5%, maybe 5% for the week. And if you're on margin, well, you're a hell of a lot better off than that. But you got to always comes back to that question, do I like this company at this price? Because remember the 5 rules. The 5 rules are simple. Never buy something you do not want to hold long term. So if you cannot see yourself buying Intel at this price and holding on to it for a long period of time, well, don't buy it. It's actually that easy. Never buy it. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has plenty of dividend increases and consistent dividend increases. Because if I'm putting my money somewhere, I want to be reassured that they are continuously profitable. And if they are continuously profitable, fine. What do the numbers work? How do the numbers look? And more specifically, what's the 30-day telling me? The 30-day chart's telling me, well, 3 weeks ago, it was at the high at 37. Now it's currently at 21.48. Well, I don't really know if this is the 30-day bottom. It's the current bottom right now. But I don't know if it's the 30-day bottom until tomorrow. When tomorrow opens up, she's going to either open up higher or lower. It's a 50-50 shot. Okay? Higher or lower. Okay? If she's higher, great. There's a good possibility that that might be the bottom. If she drops lower, well, she could keep going lower. That's why I like to look every day. Now, I do all my trading on Monday. Will I trade this one? Probably not. But I will take a look at it. Mikey G. Mara does not pay dividends. There are no dividends. Yep, Mikey G, I know that one. ASAF, Forex and stocks. is different price action. Absolutely correct. Maria CP, okay. New to this, do you think Plug Power is putting in a bottom? Justin Myers. Now, Justin Myers, number one, I need his ticker symbol, okay? More than likely, this is going to be a no. I've never heard of Plug Power, okay? Now, if I've never heard of it, means they either don't have dividends, or they don't have consistently increased dividends, or they don't have weekly options. It could be a multitude of reasons why I've never heard of it. But I've been doing this for a very long time, and very, very, very seldomly is there a stock that meets all my criteria that I have missed. Intel is cheap as it's been since 2012. I'm missing some questions. CP, what about Intel? Okay, would I buy Intel at this time? No. The only reason, now, I just went over this. Intel is at a bottom here, and I don't know what kind of a bottom that is. Is this just temporary? Or tomorrow, which starts a new week, is either going to be higher or it's going to be lower? I'm hoping it goes higher, because if it's higher, I might be into it on Tuesday. Caden, nice to see you here, Caden. Stock pickers love stocks with dividends. Okay. Damon, Macy's, careful look at bid and ask price. I would wait. BO, make any call. Okay. Oh, BRKB all the way. Back again, huh? Thoughts on DIN? Dine Brands Global, huge dividend. Now, BRK all the way, B all the way, and you and I have had conversations before. Usually never turning out in your favor because you like certain things that I just don't. And we disagree on certain things. Like this one here, I've never heard of DIN. Okay, DIN is going to be a no. Okay, sorry, it is a monthly. Monthlies I don't like because they just don't pay the same. Now, I've said this many times. I have over 300 companies that I consistently track. Why would I add one that doesn't meet my criteria? Okay, now I haven't hardly ever, I've seen it once or twice, but I've been trading for 20 years, so in 20 years you get to see a lot of things. But hardly ever do I see a monthly optionable stock. It's going for 33. The closest one is a 35. That's going for 0. The 30 are going for 225. You're losing money. And I still got to carry it for 2 weeks. And if I miss, I got to carry it for another 4 weeks. Yeah, I just don't like monthlies. They just don't pay, in my humble opinion. Sean, what's your average hold time? A few minutes. No. Okay, Sean. I basically jump in Monday morning. Ideally, in a perfect world, I would be out Friday afternoon. Perfect world. Not happening. Every once in a while, I'll hold a stock 1 week, 2 weeks, 3 weeks, so on and so forth. So far this year, the longest that I held anything, that would be AEO, American Eagle Outfitters. I bought it April 1st. I still have it. Now, I still get dividends on it I still collect premiums on it every single week. Okay? So the money is consistently coming in. Joy, hey James, is this IEP safe to invest? Now, Joy, we just looked at IEP a couple of minutes ago. Okay, I'm not quite sure if you've seen IEP. Okay, that's Carl Icahn's crap. I say that because if we go back and look at the dividends, okay, historical data, okay, we want to look at dividends only, because dividends will give me an idea of how consistently profitable they are. Okay, now, if you're investing your money into a company, let's say hypothetically speaking, you're number one, okay, Year number one, they give you 49 cents a share for profits. Okay, let's say you have a couple 100,000 shares. Okay, that's 4,900 bucks. Wonderful. Next couple of years down the line, now they're giving you 10 cents a share. Well, they just cut your dividend by 75%. Does that sound like a good company to you? And here's another thing. December 1993, they were paying 12 cents a share. They paid nothing in 94, 95, 96, 97, 98, 99, 2000, 2001, 2002, 2003, 2004. 11 years they didn't pay any dividends whatsoever. In 2005, they decided to pay dividends again. Now they're paying 10 cents a share. They cut the dividends again. So I can't get behind a company that continuously cuts their dividends. Because what does that mean? If a dividend is a portion of the profits, let's say you have let's say you have 100% profit. You take 100% of the profit, and you take 5% of that profit and you give it to the shareholders. Okay, great, that's 5%. Now, if you make X amount, well, you get X amount times 0.5%. Great. That's a certain number you start out with. If that number keeps decreasing year after year or a couple of years, then that means the company's not as profitable. Okay, let's take a look at the way that it should look, in my humble opinion. Okay. Now, let's take a look at this. In 2005, they were paying 8 cents per share. Then there was 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. That's consistently going up. That tells me that company is consistently profitable. Why would I put it in AIEP if their dividends are continually decreasing? No, sorry. There's way too many companies that increase consistently. Why would I do a company that's not making profits consistently? So it's a no. Sorry. In my humble opinion. I'm not telling you what to buy. I'm just saying I would never do it because the dividends are going the wrong direction. Why would I put my money? That's like throwing good money. You ever hear that expression? Stop throwing good money after bad. Okay, if you put money into a company that's losing, not increasing, staying still, not moving forward, yeah, that's not a good investment, in my humble opinion. MOS. Sheila likes MOS. I like MOS also. Hi there. You did not send me the program to make money. You told me about it 5 hours ago. Dude, I am so sorry you got scammed. I really am. All right, now, when I say, part of the disclaimer, okay, at the very beginning of my show, I always go with this disclaimers. I'm saying, hey, I'm not a financial planner. I'm not a stock analyst. I'm basically a nobody. The only license I have is a license to drive a car. That's it. I didn't go to college. I have no certificates. Okay, there are 27, okay, where is that camera? Is that 27 scammers pretending to be me. So when I say, if you really want to contact me and you really want to talk to me, send me your phone number. I will give you a call. Now, if I give you a call and you don't answer, well, there's nothing I can do about that except for you leave me another number and I'll call you again. So, I can't read your name, so I don't know what it is. And I do know for a fact I didn't talk to anyone today. Wait a minute. Did I talk to anyone today? It's Sunday. I tried calling someone, but they didn't answer the phone. I think that spot's gone. I tried calling this morning. Hey, MOS for next week, maybe. So I'm sorry that you got scammed out of a program that someone said they were going to send you 5 hours ago. That wasn't me. Okay, I wasn't online 5 hours ago. And a lot of you here will get an email, a text message, or some kind of an instant message from someone saying that they're me, but it's not. Okay, let's get one thing straight. I don't do cryptocurrency. I don't do Forex. I don't do futures. I don't do, pairs trading? I don't do that either. I only do dividend stock investing. Also, I don't do WhatsApp. And I don't do, what was that, Telegram? Yeah, I don't do that. You want to talk to me here. All right? Sheila, MOS for the next week. That's Mosaic. MOSTER, a G with a double E. All right, Mosaic. Take a look at that. Nice, steady to the downside. But what am I looking for? High, low, or was it? Where is it? What direction is it going? It kind of looks like it's channeling. Look at that. Nice little channel right there. We're gonna zoom into that a little bit. But quick look at the chart. Fine. Now let's look at the numbers. If I'm buying it tomorrow morning, 27.38. What's the closest strike price? Well, that would be the 27.50. And that's going for 96 cents. That's almost 3%. Okay. Well, let's take a look at the chart. High of the year, last year, 42.78. The bottom was recently, about a month ago, at 26.50. Look at the last 90 days. Okay? Last 90 days. Down, up, down, up, down, up, down, up, down. Well, it's not quite all the way down yet. So we get a little bit further to go down on this one before she turns around and goes back up again. It's like a seesaw. Look at it. Down, up, down, up, down, up, down, up, down, up. That's, stocks go down, stocks go up. That's all they do. They do not stop and help you fix a flat tire on the side of the road. Okay? They do not water your plants or trim your hedges when you're not home for the weekend. They don't do anything other than go up and come down. Go up and come down. That's all they do. The ideal thing is to catch them when they come down. Because if you're down here and the thing jumps up, you say, hey, time for profits. Take your profits. Boom. Now you're down here. Ooh, nice. Let's jump in again. Great. Time for profits. Whoops. Time to jump in. Time for profits. Same thing. Over and over and over again. So let's take a closer look. Last 30 days. The last 30 days will give me a good idea of where it's going next. Okay, not much different. Okay, here's your 30-day bottom right here, 26.50. And she shot up to 31. So 26.50 to 31, that's $5. Well, $5 on a $26 stock, that's just a little bit less than 20%. Okay? We're investors here. We buy, we sell. We're here for profit. We're not here because we like doing something for nothing. No, we're here to try to make a safe, predictable, consistent investment on our money so our money will grow, so our life will be easier when we retire. Kind of complicated way of saying I want cash flow from my investments, because that's what I want. Okay, so from the 30-day bottom, she jumps up almost 20%, comes down a little bit, goes up again, and comes back down. Yep, she should, hypothetically, should come down a little bit more before she turns around and goes back up again. So Mosaic is another one of those companies I'm going to write down for us to take a gander at during the week. Because I like Mosaic. Again, 50 years of increased dividends. They are a dividend king. CP, Sean T, the goal is to hold a week. Okay, something like that. Yes, sir, I am new. Well, Joy, how are you? Thanks for the answer. You're welcome. IEP. All right, now I gave that my opinion on Joy 3 times on IEP. Yeah, no, no, and no. Malaysia also can. Okay. Joy, okay, fine. Okay, thanks. Try CMB. Gee, we looked at CMB. Okay, Joy. Drazik, what's happening? Okay, Joy, I did look at, wait a minute. Carl Icahn makes himself richer mostly. Yeah, probably. But if you think about it, if you're going to invest in a company, don't you want to know that the company's consistently profitable? And if it's consistently profitable, James, do you think the market will recover from Friday tomorrow? I honestly couldn't tell you. Honestly could not tell you. We will find out in the first couple of minutes as soon as the market opens in the morning. Okay, and we will go from there. Alright, so Carl Icahn, yeah, we got that one. Alright, so Joy, I already looked at CMBT. 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 Now, the reason why CMBT is a no, Miss Joy, because I told you, it is a monthly optionable stock, which means I can only do a covered call once per month. Once per month comes to 12 times per year. All right, now we all know 52 times per year is better than 12 times per year, especially when 12 times per year doesn't come up with the same amount of money. I have not yet seen a single monthly optionable stock that pays or consistently comes close to 40 or 50% per year. Cardiology guy, haven't heard from you in a while. Wild to hear the wind howl in the background. Yeah, it's pretty breezy out there. Thank you for that gift. Bitcoin, Ethereum crashing now so much. Yeah, probably. Okay, Spot's gone carpet cleaning. 2 wheels is 2 wheels, brother. I used to live in St. Pete. I'm the guy that pulled the plane out of the building in Tampa in 2002. I have no idea what that means. Okay? But, yeah, I traded my Harley. I had an FXRS. Oh, don't get me wrong. I like that bike. It turned on a dime. It was nice. Feel the rumble. And I was pretty damn cool on it. Decked out all my leather. It was cool. But, I drove it one time, and I drove for like 3 hours, and my back has never been the same since. So I said, the hell with it, got rid of that. I think I traded it for Corvette. And I think I traded the Corvette for a Goldwing. But I like a Goldwing. Goldwing's a smooth, comfortable ride. I don't have to yell at my passenger. And better than that, my Goldwing had reverse. Because if you look at me, I'm what, 160 pounds? You know how big a Goldwing is? You drop one. Yes, I have dropped my Goldwing plenty of times. I think I may have had 15 Goldwings in the years. But it was really nice with that reverse. You just hit that switch, it backs right up. Yeah. It's a little embarrassing trying to back up a bike and you can't do it because it's just too damn big. Joy, thanks, you're welcome. Demone, Macy's is about to jump up probably. Shamga, Home Depot. No, don't get me wrong, love Home Depot. Been in business for over 100 years. They are a dividend king. They've increased their dividends for more than 50 consecutive years. But here's the thing, 2 things. Felix, hold on. After hours seems stocks are up, does it indicate a direction for tomorrow? Unfortunately, it doesn't. Okay, after hours and pre-hours, total different rules. Okay, these numbers, you won't be able to see these numbers. You actually have to go to a special place to do the after hours trading. But let's stick with the Home Depot. At the moment, this is where Home Depot is, 355. Okay, the 355 is going for 605. That's well over 1%. Great. Okay, now let's take a look at the numbers. A year ago, 326, bottomed out at 274. That was back at the end of October. Got a double high at the end of March at 396. Okay, last 90 days. She's up, she's down, up, down, up, down, up, down, up. Now she's coming to the downside. Okay, last 30 days. Okay, that's pretty clean. That's pretty clean. Pretty clean, cut, dry, plain to see. She goes up, okay, 30-day bottom, 30-day top, pulls back, shoots back up, pulls back down again. She should be coming back down a little bit further. Should be. Is that guaranteed? Nope, not guaranteed at all. It just goes on, the laws of physics and what do they call it? A teeter-totter. Goes up, it goes down. It goes up, it goes down. It goes up, it goes down. That's all it does. Up, down, up, down. So if the 30-day high is 275 and she's coming down, right now she's at 255. That's a $20 drop. Okay, $20 drop sounds like a lot, but on a $300 stock, not even. All right, that's Home Depot. Okay. La 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 la. Life as a Nigerian immigrant. 3 gift badges. Cool bean. Gotta love it. Demone, cool beans. Life as a Nigerian. Thank you kindly for that. Number 44, cool beans, cool beans, cool beans. Larry, how you doing? Construction, how you doing? Intel eliminated dividends in the fourth quarter. Well, let's see. INTC. For May, August, June, July, August. So hypothetically speaking, if we look at the dividend list for Intel, Intel pays February, May, August, November. February, May, August, November. February, May, August. Okay, it hasn't posted yet, so let's see if they actually have. If they are going to be paying, because if they are, it's going to be in the next couple of days. Why is it I can't see that? See, I can't see this because this stupid thing's in the way. Okay, August, all right, EX dividend date right there, August 7th. So I'm not 100% sure what you mean. Or is that means they're not going to pay it in November? Because the fourth quarter is in November. Wow, 300 million shares traded on Friday for Intel. INTC. Okay, so here we are with Intel right here. Okay, 30 days ago we're at 32, high of 37, drops down here to 21. That's a big drop. Okay, more than likely this thing is going to move up on Monday, tomorrow. How hard was it to set up your calendar? Laurie, it's not hard at all. You can go anywhere to pick up a calendar. Okay, you can go to Google and put in the search engine EX dividend calendar, and you have a whole bunch of them pop up, and then you have to decide which one do you like. Well, I like the one that's in Thinkorswim because I'm in Thinkorswim already and everything is there for me. Norman, thank you for that. Cool bean. Woo! I don't even know what that was. It just popped up and disappeared real quick. All right, but didn't Intel suspend their dividends? All right, Mia, I have no idea, because right now it says in Yahoo Finance that their dividend is going to be August 7th, 2024, which is this week coming up. Okay, that's 3 days away. What is that, Wednesday? Monday, Tuesday, yeah, Wednesday. Justin Myers, VGR. VGR, what the heck is VGR? Okay, let's do VGR. VGR. Yeah, it's no for two reasons. Okay, Justin Myers. Felix. James, can you teach beginners how to read those candlesticks on the charts? Oh, Felix, that's easy. Give me 1 second. All right, Justin Myers, two reasons VGR's a no. Okay, really, they're really plain simple. They just jump out at you. Number one, it's a monthly. I don't do monthlies. They just don't pay the same. If you had a choice, a list of stocks A that pay weekly options, okay, which would allow you to do 52 covered calls per year, gaining you roughly around, what is that, 50 to 70% per year with weeklies, or doing monthly, which can average anywhere between 1 and 2% each time. So what is that, 12 to 24% per year? So 24% per year, 50 cents per year. Okay? I like weeklies, I don't like monthlies. The numbers just don't work. Not for me. If you like them, fine. Second reason is at the high of the year. Yeah, I don't do the thing. Buying it high, waiting it go high. Yeah, no, I don't do that. Sorry. Okay, so somebody wanted to take a look at how to read the charts, the candlesticks more specifically. All right, when you're looking at a candlestick, what are you going to see? You're going to see a few things, okay? It looks like a candle, all right? it's either going to be solid red, hollow red, solid green, hollow green. There's no real big difference between solid and the hollow. Okay, that's number one. Okay, number two. You're going to see a bunch of lines. One, we call them the wicks. See, the wick. Okay, so the wick on the bottom, it's either going to be long or it's going to be short. But the tip of the wick represents the low of the day. Okay, the very bottom, the low of the day. Okay, the top of the wick represents the high of the day. All right, now when it is red, okay, that is what they call a down day, which means, see the vertical line, the horizontal line here, okay, at the top of the candle, and the horizontal line at the bottom of the candle. On a red day, the top represents the opening price of the day. Okay, that's what it opened up at. And down day means she opened up and then she dropped and then she closed at the bottom of the wick. Bottom of the candle. Okay, so you have the bottom of the wick, top of the wick. Bottom of the candle, top of the candle. Okay, a hollow red, same thing. Okay, high of the day, low of the day, opening, close. Now the green, basically the exact opposite. Okay, same thing. You have a wick at the top, at the bottom, and a wick at the top. Okay, the bottom wick is the low of the day. Top of the wick, the high of the day. Now, a green day is an up day. So the bottom horizontal line, okay, represents the opening price of the day, 11:13. The top horizontal line represents the closing price of the day. So there's four things you gotta know. Opening, high, low, close. Okay? 4 numbers. High of the day is the top wick. Low of the day is the bottom wick. Okay? On a red day, the opening is the top horizontal. The close of the day is the bottom horizontal. Okay? A green day or an up day, the bottom is the opening, the top is the close. Okay? That's the candles. Okay, while we're doing this, we might as well teach you the other ones too. Bar chart, here we go. This one looks a little confusing, but it's the exact same. Okay, top and bottom of the wick, low of the day. Top of the wick, high of the day. Horizontal line on the left, opening of the day. Horizontal line on the right, the close of the day. Okay, green day, exact same. Top of the wick is the high, bottom of the wick is the low. Horizontal line on the left is the opening, horizontal line on the right is the close. Okay, opening, open, close, high, low. All right, you got that, Felix? Denzel, how are you today, Denzel? All right, let's go back to what I was. All right, there we go. Next. But didn't Intel suspend their... all right, as far as I know, Intel's paying a dividend on the 7th of this month. VGR is a no, sorry. And CP saying they're suspending their dividends in the 4th quarter. And it doesn't make me happy. No more Intel dividend. Okay, but here's the thing. Will I take Intel off my list? That I haven't really decided yet. Okay, it does have name recognition. It does have some value to it. But I have to weigh the pros and cons about whether or not I should keep it. When do you sell the underlying stock? When it hits my target price. Let me give you a quick reasoning. What do I mean by that? All right. Now, anytime you buy a stock, that is your, let's call it your entry fee to the game. All right? So whether you buy Macy's, this is the one we're looking at now, the current price is $16.09. So whether you buy it at $16.09 or 17 or 18 or 20. Wherever you jump on the merry-go-round is your price. Okay, so tomorrow morning, if I buy it, I'm going to be looking to buying it at 1609. Right? That will be my purchase price. When I want to exit, well, I want to do a covered call, and I would be looking at the 16s. So as long as the stock is above 16 come Friday, well, I will be out on Friday. If it's below 16 on Friday, well, then I will keep the stock. I will keep the premium that they pay me. And then I'll take it into next week and do the exact same thing. And I will do that every single Monday until it hits my $16 or higher strike price to get out. Because rule number one is never buy something you don't want to hold, you don't mind holding long term. Rule number two, never sell at a loss. Drazik. Intel said it would suspend its dividend starting in the fourth quarter and reduce its headcount by more than 15%. Well, kind of makes sense. PKD, I hope that answered your question. Okay, I only sell my stock when they hit the target. Intel seasonality is flat. 28, okay, got it. Johnny, do you do one-on-one teaching or programs to learn how to do this stuff? Yes, I do. Send me a DM with your number. I'll give you a call. We'll chat, see how I can help you out. Life of a Nigerian immigrant. That's a huge dump. Hopefully we got to the bottom. Well, we don't know where the bottom is until it introduces itself to us. It takes 12. Hold on. How are you better off on margin? I didn't say that. Wouldn't percentage-wise be worse because you have to pay margin interest? Okay, so it takes 12, no 1. Okay, you weren't really paying attention. Okay, when I say I make it, okay, hold on a second. Drazik, what was the consensus on Apple dividend payable on September 12th? Drazik, we haven't looked at Apple yet. We're going to look at that in a little bit. Right now I'm going to answer this question over here. Now, I mentioned nothing at all being better off on margin or not. I say don't use margin until you understand it and understand the risks. Okay, so let's do a quick trade. Felix, have you ever been a teacher? You have the patience. Actually, my childhood dream was to be a teacher. It was. Until I found out they wanted me to go to school for 7 years, get underpaid, underappreciated, undervalued, and then I said, no, thank you. All right, so let's do a quick trade, and then you'll see a few things, all right? Malaysia also can please update me. All right, plugged. All right, it takes 12, not 1. Okay, let's take a look. We're going to do a quick little trade, and I'll show you how it works. Okay, I like Macy's. I do. I like Macy's at 16. Okay, the current price, 1609. I like it. So, let's take a look. Now, we already looked at the chart. We don't need to look at it anymore. I'm going to change it to a covered call. All right? Now, by clicking this right here, gives me a whole bunch of different strategies. Okay? So you have single, which you can buy the stock, sell the option. You have vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, collar, blah, 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 all that stuff. We're going to do just covered because it is the simplest, it is the safest. Now remember when I say I created this trading strategy for my 9-year-old daughter, it had to be simple, safe, predictable, consistent, in no way that she could lose. Alright, so if I like it at 16 and I want to do this week 16, remember the dates over here? 9 August, that's this Friday. 16 August, that's next Friday, that's 2 weeks away. 23 August, that's 3 weeks away. Okay, the more time, the more value is going to be there. But then I have to guess where's the stock going to be in 2, 3, 4, 5 weeks. Nope, no thanks. I'd prefer to see in the next 5 days. So, is it going to be above 16 by Friday? Oh, I hope so. Well, let's take a look at the 16s. I like the 16s, so I'm going to buy the 16s. There it goes. It automatically fills right there. It's a double order. What do I mean by double order? Well, I'm buying the stock. That's one order. I'm selling the option. That's the second order. A covered call is buying stock, selling the option. So I'm buying it at this price here. I'm selling it at this price here through a covered call. Now, if it hits 16 or higher, whoever buys this from me, they can decide whether or not they want to exercise that option and take my stocks away from me. Do I care about that? Nope, don't care at all. My main concern is the premium in which I am collecting. We're going to get that into a second. So, here's the trade right here. I'm going to buy 1,000 shares. I'm going to sell 10 contracts. Okay, each contract requires 100 shares. So 100 shares is one contract. 500 shares, 5 contracts, so on and so forth. All right. I'm going to hit confirm and send. What pops up? This is the actual order. As soon as I hit that button, send, it goes directly to the market maker and he fills the order. If I send it in now, when the market maker turns on his computer first thing in the morning and he does all his numbers, this will most likely fill. But let's go through the numbers and see what it looks like. First thing I always tell everyone is the order right here, read it out loud. Your eyes can deceive you. Okay, hear it, read it, speak it. Does it sound right? All right, here's the trade. Buy 10 covered Macy's 100s. Those are the weeklies. 9 August 24th. That's this coming Friday. The $16 call. This is what we talked about. I like Macy's at 16. See the number right there? 1609. I like it at 16. Okay? 1556, that's the purchase price, limit order to open to open. Why does it say to open to open? Well, because there's 2 trades here. One, trade number 1, I'm buying the stock, 1,000 shares of Macy's. That's trade number 1. Trade number 2 is I am selling 10 contracts at $16. So if the stock is above 16 come Friday, next Monday I have all my cash back and I get to still keep that 1% or that 2%, whatever I collected. Next we're going to take a look at right here. Okay, it's called break even stock price, 1556. That's the break even. So anything over 1556 is going to be profit. 1557, 1558, so on and so forth. Right now the stock is at 1609 and it's at a bottom getting ready to turn to go back up. I have no problem whatsoever buying it at 16. Now, next line is maximum profit. Remember I told you safe, predictable, and consistent? Well, I'm going to know what I'm making off of this trade before I even do it. All right? I'm making $440. Right? What is it costing me? It cost me $15,566. Okay. Now let's bring the calculator out. Clear that. Okay, we can take the 440 and then divide it by the purchase price, $15,566. That's going to give me a grand total of 2.82% for the week. So if the stock is $16 on Friday, well, I made 2.8%. So what does it mean when it says covered call buy right? Is that you buy the stock and write the covered calls against it? That's exactly what it means. Buy right, covered calls, same thing. They always go by different names. It depends on who you work, who you're doing with. Okay, so this is my rate of return, 2.8% for a cash account. Now, let's do the equation if it was a margin account. Okay? The profit is still the exact same, $440. But on a margin account, 50% of that money is mine, and 50% of that money belongs to the broker's house, which in this instance it would be Charles Schwab. So I'm borrowing that money from Charles Schwab, and I'm borrowing it at 8% per year. So I would never tell anyone to use margin, unless you can consistently get at least 16% per year. Because if you're borrowing money at 8, you have to pay that 8% back. make over 50% per year, so I have no problem whatsoever paying that 8%. Okay, so on margin, the profit is still the exact same. Okay, where is it? Right there, $440. But I'm dishing out less money. I'm only dishing out $7,595. Because remember, half the money is mine, half the money belongs to the broker. So that comes up to 5.79%. That's almost 5.8%. Okay, for the week. All right? And that's on margin. That's for 1 week. Now multiply that by 52. That's over 300% return for the year. That's freaking crazy. But you have to ask yourself the question, do I like Macy's at that price? And be ready to defend that. Be ready to say, yeah, I like it at 16. I have no problem buying it at 16. I am willing to hold it at 16 for as long as it takes until it hits that target price of over 16. Right? Never buy something you don't want to hold long term. Never sell at a loss. Make sure there's plenty of increased dividends and weekly options. And then make sure the numbers work. Well, the numbers work very fine for Macy's. And that's one of the reasons why Macy's has been my favorite stock this year. Who knows? Might be my favorite stock next year. I just don't know. All right, I have over 99 questions, so I'm going to hold off on looking at anything. I'm going to try to breeze through all these questions. Plug is a notes, always has been. I missed a whole bunch of these questions. Cole's looking interesting. Where do dividends play into this? Sam, excellent question. Sam, here's where dividends play. Okay, see the calendar right here? Each one of these little green dots represents a company. Kimberly-Clark. Kimberly-Clark. Ford, Intel, Citigroup, Apple, ConocoPhillips, PPG, U.S. Steel, Clorox, Kroger, ExxonMobil, Hershey's, Walmart, blah, 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 blah. Each one of these green dots represents when the company is paying out its dividend. So, there's almost 9,600 different companies to choose from in the stock market on any given day. That's a lot to choose from. How do you decipher which ones you want to invest in? For me, I like a consistent increase in dividends, at least 20 years. Now, there's plenty of companies that have 20 years of increased dividends or more. Then I like to put those together with weekly options because I want weekly cash flow. So the dividends come in to tell me when to look at the company. Because if we have Clorox paying a dividend on the 14th, I don't want to buy it the week of the 14th. I don't want to buy it the week before. I want to buy it 2 weeks before. I want to give it time to move up. And if I buy it at the market price and sell someone the right to buy it from me at the market price, the very same day I buy it, that's like this example here. With Macy's, if I buy it at $16.09, I sell somebody the rights to buy it from me at the exact same price I paid for it. And the premium that I collect is going to be more than 1%. That's where the 1% comes in. That's where the dividends come in. So if I'm looking at good quality dividend stocks and only good quality dividend stocks, well, I only have 300. 300 out of 9,600. Okay, that's a big difference. I'm only looking at 300. And you take those 300 and you put it into a calendar. Okay, you get 13 weeks per quarter. Okay, 13 weeks per quarter. Now I have 300 companies that I have to look at within 13 weeks. Okay, within 13 weeks. That's anywhere between, I just showed it a second ago, between 5 and 20 different companies I look at on a weekly basis. So this week here, I'm going to be looking at Citigroup, Ford, Intel, British Petroleum, IBM, Visa, Siri, and Wells Fargo. Maybe I only pick up one of those. Fine. If I pick up one of those, get my 1%, great. The next week, I'm looking at Apple, ConocoPhillips, PPG, Exxon, U.S. Steel, Clorox, Kroger, ExxonMobil, Hershey's, RTX, and Starbucks and Walmart. Okay, so I pick up one. One of those pays me 1%. I'm only looking for 1% per week. You know, I only have like between 4 and 6 stocks per account. So I don't have to, do a lot of picking and choosing. It's not I have a whole roster in every account. Calls look interesting. 52 bottom. PRZ. Oh, never heard of it. Justin Webb. Adding in not dividend stock, but still mooning. Yeah, sorry. Brand. Do you wish you bought Apple when you were young? No. I wouldn't be where I am today. Yo! PRZO. Never even heard of it. Why do people come up with stuff I never heard of? PRZO. No options. That's a no. Sorry, just in time. You have to hold it how long to get a dividend? 2 days. Hey, it's Mima. Stanley. Tumchi. Is Surrey worth it with the volatility? All right, Stanley, we looked at Siri a couple of weeks ago. Now I want to show you something about Siri and tell me what you think. Okay, so here's Siri here at 316. Okay, the 3s are going for 12. Okay, the 3s are going for 12. The 350s are going for 3. Not even worth it. National flood warning. Yeah. I get that. Yep. Okay. Resume. Okay. Alright. What feed is he actually reading from? Because it's not this one. Alright, show him crazy. Yeah, I got Facebook over here, Instagram here, TikTok here, YouTube here, and another YouTube channel down there. So I got a lot of questions coming at me from all different angles. I'm carrying on a whole bunch of different conversations. I'm also listening to the storm outside, and I'm also listening to the television in the other room. I got a lot of information coming in at one time. I'm doing the best I can with what I have in front of me. So the question at this moment in time is Siri worth it with the volatility? What I'm trying to say about Siri is it looks interesting on the chart, but let's take a look at this right here called the seasonality chart. For those of you who know what seasonality is, winter, spring, summer, fall, okay, January, February, March, blah, blah, blah. Certain stocks move at a certain time of year. Okay, Weight Watchers goes up at the beginning of the year. Go figure. Sorry about that. Got interrupted by one of those emergency warnings. Where was I? Oh, Siri. This right here is a seasonality chart. Okay? Far left, January 1st. Far right, December 31st. Okay? January through December. The blue line represents the movement this year. Red line represents the movement for the past 10 years. You see that big, huge spike right up there? Okay? This big, huge spike right here. Okay, we traded Siri right in this time frame right here. Okay, where she jumped up. That's where we were. Okay, we took it up high and then she dropped. Well, now she's in a little bit of a downturn. Why do I want to look at Siri? Stocks move for certain reasons. Why? Don't know, don't really care. All I want is the predictability. If it's done it 10 years in a row, more than likely it's going to do it year 11, year 12. It might not. Now this is just historical performance. It's not guaranteed. But it is an indicator that I like to look at. How does the stock normally work this time of year? And this time of year, okay, she's in a little bit of a downturn. Do I want to jump into a stock when it's in a seasonal downturn? Nope, not at all. I like Siri. Siri's not going to be back on my list until she comes into a better season. What are we looking at? Probably in the fourth quarter. Because look at the third quarter. Third quarter she drops. In the fourth quarter right here, she starts to go back up again. So yeah, I will look at Siri in the fourth quarter. Show my crazy. What fees are you actually doing if not from here? Because it's not this one. Yeah. That's funny because I just read your question. C or Intel? I think we looked at Intel earlier. C we haven't looked at yet. So let's take a quick look at C. Okay, that would be Citigroup. I like Citigroup. Okay, Citigroup's going to be a no for this week, but we will take a look at it. What do you think of HE? That's going to be no. And the Maui settlement, if they reinstate their dividends. How about RYLD? Ugh. S-Turn, you're new here. Okay? Yeah, you're not even going to hang around and get my answer off HE. HE is going to be no. Hawaiian Electric. They stopped their dividend a while ago, just around the fires, and they haven't done anything since. So it's kind of like sit, wait, and watch to see what happens. And it wouldn't be on my list because they don't have consistent increases in their dividends. Okay, and RYLD is a no. It's a big fat turd if you ask me. All right, so Citigroup, first thing I always want to look at, the high of the year, the low, where was it, where is it, with direction, blah, blah, blah. Yeah, it's going to be a no, but I want to take a look at it because here's the high right here, and here's where we are, pullback. Now I want to see how much pullback is there going to be. Currently it's at 58.68. The 59s are going for 75. Well, that's well over 1%. Okay, a year ago we're at 46.66, bottomed out at 38. The double top at 68. Last 30 days, here we are. Okay, she goes up, pulls back, up, pulls back, up, pulls back. Yep. We are currently at a 30-day bottom sitting at 59.36. Now, from 68 to 58, that's a $10 drop. That's over 10%. Okay, you need to ask yourself, with a 10% drop, is that something worth jumping into? Well, it depends what the numbers look like. Okay, right now, the 59 is going for 75 cents. Okay, so you clear this out. You go 75 cents, and you divide it by 59, the purchase price. And that comes to 1.27. Well, that's more than 1%. And do you like Citigroup? Well, I don't like it until it finds the bottom. Okay, that's a big drop. More than likely, that's going to jump up tomorrow morning. Anytime you see a big, huge drop like that, look at, she's channeling here. Thursday, Friday, everything dropped. Okay, so what's going to happen Monday? Either it's going to be a continued dropping or she's going to turn around and go back up. One or the other. Is this live or not? Billy, yes, it is live. He's not OLC. Acetone. I have no idea what you're talking about. Billy, yes, it is live. Okay, Billy. Okay, thank you. What comment is he reading from? Yeah, I have a whole bunch. Okay. Keep on going. Keep on going. Icon? Okay. Is this sink or swim? Yep, it's sink or swim. All right. Spots gone, carpet clean. I am full dressed, electric glide, classic guy. We'll talk to you soon. I'll explain plane crash. All right, that works. Don't get me wrong. I took an electric glide for a ride. Nice bike. But do you want to hear something funny? I was riding my Goldwing one day, and I got a flat in the Goldwing. Can you imagine what a flat is on one of those things? I called up the tow truck. Tow truck comes and picks up. He says to me, "Damn, I never picked up a Goldwing before. I pick up Harleys all the time." He said, Harley's always breaking down. But Goldwings, hardly ever. Let's continue. Big lots. All right, you actually, hey y'all, Mima. Okay, Mima, you actually got to give me the ticker symbol. Wait a minute, I think I can find it this way. Big. Wow, there it is, right there. Big. Yeah, sorry, kiddo. That's going to be a no. Big Lots is a monthly, and it's like $1, and it's consistently dropping. Okay, so I don't like consistently dropping, and I don't like monthlies. Monthlies just don't work. It's really not that difficult. Follow you, thank you, Roxy. How are you, Miss Roxy? You, Drew White, UEC. Okay, now Drew, don't take this the wrong way. don't take this the wrong way, but when I say, what the hell is that? Usually means I've never traded it before, which means it's not on my list. So, Uranium Energy Corporation, they do have weeklies. Okay, fine. Let's see how often they increase their dividends, because that will give me an idea of that will give me an idea of how profitable they are. And here's a big issue I'm having. There are no dividends in the selected time period, which means if the company doesn't have any dividends, why am I looking at it? Okay, sorry, Drew. Samson, how do you feel about, is that right? TLT calls. I thought I said TIT calls. TLT. What the heck is TLT? TLT. iShares ETF. iShares ETF. Okay. Let's put that in here. TLT. And see how often they pay dividends. Okay. Damn. All right, they get dividends all the way, holy cow, 08, 04, 03, 02, since 2002. Well, okay, TLT has dividends all the way to 2002. Let's look at the numbers. Okay, 2002, they were at 37 cents. 34, 39, 45, 31, 34, 40, 40, 35, 37, 35, 40, 42, 32, 34, 36, 35, 28, 33, 35, 40, 32, 33, 35, 34, 32, 34, 36, 35, 29, 41, 30, 31, 32, 30, 30, 38, 27, 25, 28, 26, 28, 29, 26, 25, 24, 26, 28. They're like not increasing at all. Now they're going down. 24, 19, 18, 17, 16, 19, 20, 18, 17, 19, 20, 24, 28, 27, 29, 31, 32. There's no consistency in the increasing this whatsoever. Now don't get me wrong. I mean, cool. They have over 20 years of dividends, but not consistently increasing. So what is that telling you? Well, it's telling you they're not going up. They're not continuously being profitable. They're just kind of being stagnant. Do you really want to invest your money with a company that's stagnant? I like continuously increasing. How do you feel about TLT calls? All right, so TLT, we found out that they do have weekly options. Okay, fine. But here's the thing. Okay? iShares by BlackRock. Well, look at the last 90 days. Up, down, up, down, up, down, up. Where do you think it's going to go next? Well, it's going to come down. So this, I wouldn't look at this thing for another 2-3 weeks. Okay? Because you saw it right there. Up, down, up, down, up, down, up. Whoa, what's next? Down. It's a seesaw. What else do they do? They go up, they go down. They go up, they go down. They go up, they go down. That's all they do. Is CAT now off the trade list because it's over 250? I was looking at it about 3% for next week. Well, Sheila, let's take a gander at it. I like Caterpillar, but I don't do stocks over 250. Sorry. CP, Mijma, Big Lots is a penny stock. It's a no. Thank you, CP. So, CAT, you say, Miss Sheila. Okay, first thing I always want to see. High, low, where was it? Where is it? What direction is it going? This is where it is now. Look at that big drop. I want to take a look at that and see how it reflects. Now, even though I don't do stocks over 250, some of you guys might do it. So 321.50. The 322s are going for $9. Cool beans. So let's take that out. Let's move this over to here. Let's clear this out of the way. Let's try the 320s. 10:35. 10:35. All right, so I'm losing $1.50 right off the top. Subtract $1.50. Right now I'm walking away with $8.85. Yeah, I might be better off going to the 322s. Anyway, let's divide this by 320. 320. That's 2.7. Okay. 910. Okay, for the 320s, 322.50s. I divide that by 321, 321.5, and that gives me 2.8. All right, Sheila, I'm not seeing the 3% that you said. Because you got to remember, when you're buying it at the 321.50, and then you sell them at 320s, you got to deduct the 150 off of there. Because if you're buying it for 321.50 and you're selling it for 320, well, you're losing $1.50. So you take it off of your premium. The premium is $10.35. Don't get me wrong; it's still a nice price if you like Caterpillar. So a year ago, Caterpillar's at $280, drops all the way down to $224, and that was the end of October. Okay. In the beginning of April, she's at the high at 382. Okay, so 382 is the high. She drops, pulls back, drops, up, down, up, down, up, down, right here. All right, last 30 days. That's pretty clear to me. Okay, 30 days ago, we're at 329. The previous 30-day bottom is right there 30 days ago, and that was 321. That's a 30-day bottom, previous 30-day bottom. She shoots up a week later, now she's at 369. So she goes from 321 to 369. That is like $40. That's over 10%. Well, yeah, profit taken, there you go. Little retrace, back down again. Now we have a new bottom at 317. Okay, there it is. So, with a drop like that, there's a high probability tomorrow it should go up, hypothetically speaking. Okay, now what does Caterpillar usually do this time of year? This time of year, usually, Caterpillar, tiny bit to the upside. I'm talking a very tiny bit to the upside. Okay, fine. Let's take some more of these questions before we call it a night. Do you have to hold a stock for a long time to get the dividend? No. 2-3 days. They cut their dividend Friday. Okay, Tim. What the heck? Alright, questions. Asia down so much because they were humping the last 50 years. No kids. To buy stuff. Okay. Good idea, Macy's, buy more. Okay, Damone, like that one. Sebastian, if I sell covered call and close the position before expiration date, what happens to the premium? All right, here's the thing, Sebastian. If you jump in Monday morning, okay, if you jump in Monday morning, buy the stock, sell the option, all right, that premium goes into your account at that very instant. Means you can do anything you want with it. Here's the thing. You cannot sell that stock until you release it. That becomes a lien on your stock. That's basically what it is. Sebastian, you keep the difference between if you cut the loss less than you sold the open. Yep, about basically that. Or you pay the difference if you buy a close. Okay. Rich Bruner, what did you retire from? Working for other people. You don't want to use someone else's money and get in trouble. No, you don't. So I always suggest people do not do margin money until you understand it. Okay, don't even put real money into this until you understand it, until you get good at it. That's why I always suggest people use a paper trading account. Now, I've been trading for over 20 years. I still have a paper trading account because there are some trading strategies that I haven't tried yet that I want to try, but I don't want to risk any real money. Okay, the market's been around for over 400 years. It ain't going anywhere. Okay, if you don't do anything this week, wait till next week. Wait till the week after. Know what you're doing before you do it. Especially beginning and starting out. Yep. Okay. Hayes, what happens after 5 days if you don't do anything? Okay, Hayes, got to be more clear about what that question means. Now, when I say I buy stocks on Monday and I sell the covered call for this week, which is 9 August, which is this Friday, which is 5 days, that means I'm sitting with some stock on Friday afternoon before the close trying to figure out what to do next. So if I buy on Monday, buy the stocks on Monday, sell the covered calls on Monday, Friday they expire. So at 3 o'clock on Friday, I want to see what my positions are doing and what's going to happen to them if it goes this way, if it goes that way. Okay, that's why the morning trading group, it's Monday, Tuesday, Wednesday, Thursday at 9 o'clock, and we're there until you guys are done asking questions. I will stay on there for as long as you want to ask questions. Great. Way to get your questions answered. That's what you're paying for. To be there, have your questions answered, and to watch live trading and ask questions. All right, Friday, we jump on at 3. Because at 3 o'clock, it gives us an hour. It gives plenty of time for everyone to go through their positions to make sure that they're profitable and they're not losing anything. That's why we do it on 3 o'clock on Friday. Coach Joe, futures down big, so I wouldn't do that now. Okay. Wildcat, if it doesn't hit the call price and expires, do you just set up another call option immediately? Yeah, usually on Monday to the next Friday. Yep. Such a cool live stream. Well, thank you for that. Like it at 15 or 14. Not quite sure what we're talking about. I'm assuming that's going to be Macy's. That's the only thing that we looked at that are close to that number. Should I buy Macy's now? Or Rosari? I can't tell you that one because I don't know anything about you. If you want to really get my opinion, okay, you can give me a call. Or you can drop your number in the chat and I'll give you a call. Bubbles OMJ. Bubbles, how are you doing? Albert, hey dude, what do you think about Rebound? I have no idea who Rebound is. You are so smart and so gracious for sharing your knowledge. Laura, you're welcome. But Laura, you haven't asked me any questions. I appreciate the compliment, thank you. But I'm kind of waiting for a question there. All right, it says, edits OMG, though I'm Tyron no 2. Okay, that doesn't make any sense to me, sorry. Alright. Ram Canal. Him, okay. G. When do you bail on a stock? Or do you ever care because it's a dividend king? Ooh, gee, good question. I'm a firm believer on doing what I say and not, do as I say, not as I do. No, doing as I do. Anyway, I'm a firm believer. Buy a good stock, never sell at a loss. Okay, I held Target from 135 all the way down to 102, back up to 135, and it hurt going down from 135 down to 102. Yeah, that was a little uncomfortable. But she went from 102 back up to 135. I finally got out, and I barely broke even. I think I may have lost some on that one because I lost a big fat chunk when she jumped up 16 points overnight. They call that a black swan event. All right, so we have a few more questions before we call it a night. JP Morgan Ram, huh? JP Morgan. JPM. All right, JPM is going to be a no this week only because look at where she is. Okay, the high is here. This is where she is. Not enough profits have been taken, in my humble opinion. And we get these two big down days here. So, look at the volume spike. See, the blue line's down here. That's all volume. Right? This up here, this mess, this is what we create. Hey, Judy, how are you? All right. So, JPM 198.80. Okay, the 200s are even going for 250. Okay, so you are getting your value there from JP Morgan, but you always got to ask that one very important question. Do I like the stock, and do I like it at this current price? Right now it's 198.80, close to 199. Glad you're doing well there, Miss Judy. Okay, JP Morgan, John, okay. Haynes, to get the dividend, how many days before do you have to buy the stock? Haynes, I'm going to go right over here, go this, get rid of this. Alright, this calendar right here represents dividend stocks. I downloaded Thinkorswim and got my paper trading account set up. Cool beans, way to go there, Miss Judy. Alright, each one of these green dots represents a company on my personal list. So anytime they're here, I don't question them because I've already done the work. I've already done the details. Take a look at them. I'm just waiting to know when are they paying their dividend. So the green little dot is the EX date. The EX date, there's 4 dates to remember. First date is the announcement date. That's when they tell you when the dividend's going to be and when it's going to be paid. Second one is the EX date, the last day the stock trades before the dividend's paid out. Third date, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Fourth date, the payment date, when you're actually getting your money. So if you want to collect just the dividends, you need to buy it before. Okay, Clorox right here, the 14th. You want to get the dividend for Clorox, you got to buy it the 13th, the 12th, the 30th, the 8th, the 6th, the 7th, the 1st, any day before the EX date. Okay, you buy it before the EX date and you carry it till the date of record. Okay, now that used to be a day or two. Now it's the same day. Look, the EX date, 8/14. Date of record, 8/14. Let's go back 1 year and I'll tell you what it was last year. Come on. Okay. Okay, Caterpillar, same stock. EX date, 7/19. Date of record, 7/20. This year they changed it. But you still have to buy it before the EX date and hold it past the date of record. To get the dividend, how many days? I already did that one. Can I ask what platform you're using? That is Thinkorswim behind me. Like, where do I go? What do I use to get this information? User 5043. Your best, easiest, fastest way right through here, the 10-minute trader. Okay, let me read a couple things. Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern Standard Time. It says right there. Okay, all the information. Come down a little bit further. About us. Well, actually, it's about me. If you are looking to strike it rich overnight, I'm reading it right here, word for word. If you're looking to strike it rich overnight, this ain't it. My main focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. See, it's written right there. If it's written in black and white, it must be true. No, never believe everything you see on the internet. Always do your own research, do your own due diligence. Hey, right next to it, the video, No Risk Trading Explained. Just click on the video and it'll take you to my YouTube site, which has bunches of videos going all the way back 12 or 13 years. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. Seriously, this was created for a 9-year-old. You guys are all over the age of 18. It should be simple. Here's how it should be simple. You ready? First thing you want to do, look at the calendar. Oh, tomorrow is, what is tomorrow? Tomorrow is August 5th. Okay, what dividend stocks do we have up for consideration this week? Well, 2 weeks out. Chevron, Aflac, Target, Walgreens. That's just this list. Now I have 7 lists. Okay, that's list number 1. What another list do I have? Calendar spreads, dividend aristocrats, dividend champions, dividend contenders, dividend kings. My ETF holding list. Ooh, that's a nice one. My high volume stocks, old list, Warren Buffett's list, and then weekly optionable list. I have plenty of stocks to look at, so I'm not too worried about anything. Like, where do I go? All right, I just showed you that, the 10-minute trader. Dakota Frank. I know you said that you don't like monthlies, but what about PSEC? 13% yield. Oh my goodness. PSEC is a big fat turd. Let's just do this one more time. You ready? Dakota Frank. We're going to show you a big fat turd called PSEC. All right. Trade. PSEC. Number one, it is a monthly optionable stock. What does that mean? That means I can only do dividend capture. No, wait a minute. It's late. It's almost time for me to call it a day. I'm going to turn into a pumpkin. A monthly optional stock means I can only do it once a month. That's 12 times a year. The numbers usually just don't work. At this moment in time, it's at 533. Okay? What is the 533 going for? The 5 is going for, what is that? What? Can you read that? It says 0. It's going for 0. If I'm buying at this price, selling that, I'm getting nothing. Why the hell would I do it? But wait, it gets worse. Let's see how much worse it gets. Okay. We're going to go to Yahoo Finance, put in PSEC, PEC. Okay. So let's take a look at the dividends PSEC has been paying. All right, you ready for this? Judy! Thanks, I'd be a good-looking pumpkin. All right, so PSEC, or PSEC, has been paying dividends since 2004. Okay, so let me read some of these to you, and you tell me what you think. So 2004 was 10 cents. 2005, 13 cents. Ooh, that's promising. Then it went to 15. Then it went to 20. Then it went to 28, 30, 34, 38, 39. Ooh, this is looking good. 39, 40, 41. Uh-oh. 2010 was at 41. Then it dropped down to 10. That's a 75% drop in dividend. Why the hell would I want this company? But wait, it gets worse. 10 cents. It was at 10 cents from 2010 to 2012. Okay. 2012 it went to 11 cents. Okay. Okay, it stayed at 11 cents until 2015. That's 3 years of no increases. But wait, it still gets better. In 2015, it went from 11 cents down to 8 cents a share. And it stayed at 8 cents a share all the way to 2017. And what happened next? They decreased the dividend again to 6 cents a share. And it's been at 6 cents ever since. So, let me ask you this question, Mr. Dakota, or Miss Dakota, whatever it is. Why would you put your money into a company that is consistently losing money? Okay, so a dividend is a portion of the profit that is paid by the company to the investors. So you and me, okay, when we take our personal money and we invest it into a company, we become a stockholder or shareholder. We own a portion of the company. We are entitled to a portion of the profits. Now, if a company is consistently profitable, the profits increase, which means the dividends get higher and higher. If the profitability of the company decreases every year, well, then they cut the dividends, and the dividends get smaller and smaller. Well, PSEC, P-S-E-C, the dividend's getting smaller and smaller and smaller year after year after year. What does that tell you? Well, it tells me that the company's not profitable, and they're not consistently growing. So it's a big, fat no from me. That's just me. If you like it, more power to you. Now, but wait, it gets worse. So we're going to go to the summary for PSEC. All right, now, what kind of a yield are they giving? Okay, so the dividend is 72 cents. The yield is 13.6. Now, a 13% yield may be good, but the company is consistently losing money. and they're consistently losing money, how long do you think they're going to keep that yield at 13.6? So for me, it's a big fat no. Now, if I'm showing you how to get a safe, predictable, consistent 1% per week, that comes to over 50% per year. So Dakota, the question you should be asking yourself, well, does it make sense? Is what I'm saying correct or is it incorrect? If I'm looking at a company and they're consistently increasing their dividends, well, that means they're consistently profitable. It's just elementary. If you make more and more money, well, you give more and more money to your investors. If you make less and less money, well, you give less and less money to your investors. I don't care if they're giving a 13% yield, they're consistently losing money. So if they had, let's go back to the dividends again. Okay, so 2024, the dividend is 6 cents. Right there. Okay, so 2017, okay, it was 8 cents a share, and then they cut it to 6 cents a share. So from 2017 until 2024, which is 7 years, they have not increased their dividend at all. So for the last 7 years, they have not increased anything, which means it's just a no. And why do we have to keep beating this dead horse? It's just a no. If they keep losing money, I want nothing to do with them. Sorry. Terry, good to see you, by the way, again, sir. All right, Terry, how are you? Stocks dumping really hard. Yep. Dump you something. All right, thanks. Cool. Tomorrow is going to be a very interesting day. You're absolutely correct. It should be a very interesting day. Thank you. I appreciate the advice. It's not advice. Definitely not advice. That's just my opinion. Okay? Now, you guys, you may think it's advice. It's not. It's just my opinion. I don't have any legal authority to give advice to anyone. Okay? Not advice, just my opinion. That being said, it is almost midnight. I'm going to turn into a pumpkin. You guys don't want to see that. I'm done for the night. For you guys in the morning trading group, I already sent out the link. I already sent out the list. We will see you first thing in the morning. You other guys, I'll see you tomorrow night. Have a great night, and we will see you again. Chevrolet! You're over there on YouTube. Cool beans. All right, you guys have a great night, and we'll see you again tomorrow. Done over here. Good connection. Now, how do I stop this damn mess? Oops. I don't know how to turn this damn thing off. That's weird. Oh, there we go. Close. There it is. Dang. Did I miss it? Sorry, dude. I'm here every night, 9 until 11:30. It is 11:53. Catch me again tomorrow night, dude. Sorry about that. You guys have a great night. I will see you again tomorrow. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Tra-la-la. Have a nice day.